If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello, ladies and gentlemen. How's everyone doing? Hope you're well. Hope everyone's having a fantastic week. We're currently on Wednesday, so halfway through, and we have FOMC later today. So the way these streams work, when we have FOMC, we will have, I think it's Chris and Nick coming to take over the show at that time, so they'll run through all of it with you. And then we have, obviously, other guests in the meantime, such as myself. So, how's everyone doing? I don't think we are really expecting much from FOMC. It's not, well, from my personal opinion, I think it's extremely unlikely that we have any talks of rate hikes or any type of rate increase. Because, I mean, we had that sentiment not too long ago. I want to say not... Sorry, guys, dogs. I don't know what they're doing. What was I saying? Yeah, so we had the rate hiking sentiment not too long ago. I think it was like earlier in July, sort of June period. And that was largely driven by the fact, obviously, we had the Iran situation, Strait of Hormuz, oil higher, yields higher, inflation expectations higher, so on and so on. But since that point, it's kind of all been disappointing in terms of the data. So if we look on the US dollar here, or the US heat map, we can see the score is 11%. Now, I've spoken about this quite a lot because I find it fascinating, but the US dollar, or the US heat map here, was at 100% in July. It's lost 81, give or take, 89% of its score, which is just, it's crazy. So what we can see, growth has been coming down. So growth obviously missed expectations here. So forecast was 2.1, it came out at 1.5, disappointment. PMIs, both disappointing, still above 50, so it's okay. However, manufacturing was okay, I'm misreading this. However, services did come down to 54.1, down from 54.5. Retail sales, down. PPI is down, wage growth is down. So, I mean, obviously then we've also got the labor market, such as NFP here, that's also down. So it's not looking good, and I just do not see any world where the Fed can justify, to be honest, even a hawkish lean at this point. I think it's going to be pretty neutral, I would say. My voice is not audible. Why is my voice not audible? In what way do you mean? Is it that bad? Should I, do you want me to change it up? Hold on, let me see, what am I using here? So I'm using a MacBook speaker. As I said, I am still traveling, so I'm doing the best I can. I don't have my mic with me or anything. 2288, good to see you. Gold shot up, yeah, I know. Gold's doing quite well. We can take a look at gold in a second. It's fine, fantastic, thank you. Okay, so yes, I do not think we're going to get the Fed talking about rate cuts either. I think it's very likely to just be quite neutral. But of course, we'll have to see. It's very, very difficult to tell exactly what's going to happen. You can get a gauge, you can form your own ideas, of course. But yeah, sitting here and saying I think the Fed's going to be hawkish or dovish, I don't think is very useful because, to be honest, I don't think it's going to go either way, especially not on the hawkish side. So yes, gold has been having a fantastic run so far today. So it's one of these situations, it's good, but it's also quite frustrating because I'm still not in a solid long position. I've got my positions down here around 4,000, which are fine, but as I've been saying, they are very, very small positions. So unfortunately, it's kind of like a suffering from success situation. It's like I am in the long positions, but it's definitely not what I wanted really. I wanted to have a bit of a larger size here, and I also sat on the sidelines with silver as well. So my metals exposure is actually quite minimal at the moment. Now, with that said, I wouldn't want to go into really any trade right before FOMC. I just do not see that as a reasonable thing to do. Again, for the way I trade, you guys might have different opinions, different strategies and things, but I don't trade news specifically. If I'm already in positions, I'll stay in them. But yeah, it's not something I aim to do. Okay, let's see what's going on here. IK01242 can hear me. That's good. My voice is very loud. Turn your volume up then. There's not much I can do about that. As I said, I am doing my best. Trump, I've suspended 50% tariffs on Canada. Yeah, I think Trump is in a difficult situation with Iran. I'm not sure why he would want to add on to his plate. He's a big fellow like that. Okay, so Tiger's had to turn his volume up as well. Again, I apologize. I don't think there's much I can do. Let me just double check because I might be able to turn it up on here. So output, let me turn this up for you. Hopefully, I didn't just burn anyone's eardrums, but that might help. So yeah, you'll have to bear with me. Again, this is the start of the stream. It might be a little bit scuffed, but you have the professionals coming on later. Like I think Tiger's on actually after me, and then Marco, Alan, Chris Pulver, and Nick. So you'll be good. Jeremy, good to see you, my friend. Hope you're well. So Christoph says this morning silver rejected a weekly level a little bit above the fib. This would be valid for me. Let's see. What is silver doing? Is silver given a setup? No. I suppose, Christoph, you are likely going to be looking at this, I would imagine. Yes, this would be a valid entry, actually, in hindsight. Probably. Yeah, I do quite like it. Although it didn't come down to the level I wanted, which is the the daily sort of highs on the left side. What we did see is price reject the previous high here and the low. So it came into this sort of zone. Yes, granted, it broke a little bit below the 61.8, but it still had the rejection, it back into the fib, and then continuation higher. So yes, Christoph, I would, if I saw it, I probably would have taken an attempt there, but I didn't. So unfortunately, not much I can do. Have you seen the news that made gold shoot up? It was the U.S. Treasury announcing increased size of nominal long end. Yeah, I've seen that. I've not looked into it though. I was taking a family member to a flight this morning at Heathrow, so I've only just got back. Christoph says CAD Swiss long is at an interesting fib level. CAD Swiss and the edge finder is bullish. Interesting. Let's take a look. CAD Swiss. Well, let me just filter this out. Let's get rid of the neutral. We don't like neutral around here. CAD Swiss is. Am I blind? Where's CAD Swiss? You did say CAD Swiss, didn't you? Hold on a second. Yeah, you did. I don't see it. Maybe I'm blind, but I do not see CAD Swiss here, unfortunately, Christoph. So automatically it would be a no-go for me. What time is FOMC today? I think it's 7 p.m. UK, if I've got that right. You might want to just double check that though. Obviously, it also depends on what time zone you're in. So, it'll be different if you're in Australia. So CAD Swiss is bullish. Let me just double check because I might be being blind. Let me just actually search for it. Okay, so it's 3. No, yeah, there's nothing here. I suppose 2 out of the 3 pillars that I like and pay attention to are bullish. So growth is bearish, jobs is bullish, and inflation's bullish. So actually, this might be enough for me to get long. Having said I don't like it, Christoph. So retail sentiment's bearish. I don't really care that much about retail sentiment, and the technicals are bullish. Seasonality is not great, but the trend is bullish. So actually, let's take a look at the chart because I don't mind it, actually. CAD Swiss, here we go. Actually, you know what? This might be a decent little play. Into the fib zone. Previous high on the left. We've touched the 200, well, almost touched the 200 and shown a rejection. Very similar, really, to what we saw in this period here. So, yes, actually, Christoph, maybe you've just given me a bit of source there that I wouldn't have noticed. The issue I have with this is the stop loss size. This is just a little bit too large for my fancy at the moment. So I think in this case, I would need to have a stop just below this wick on the left, and this allows room for the 200 moving average as well. So if we end up breaking both of these things, I don't really want to be in the position anyway, because then the next support level is where my stop would be anyway. Does that make sense? So I think the best thing in this case, if I was to take it, would be a stop right here, just below the previous sort of wick low here in the 200. That's the approach I would take. So yeah, actually, I'm going to add this to my watch list as well. There we go. So we've got one there. Spy God, hello. 2 p.m. Eastern for minutes. I'm not sure what time that is for the UK. I think it's probably around 7, I would imagine. Thoughts on Nasdaq? Interesting you say that. We were looking at Nasdaq yesterday, I think it was, and I was looking for a short position because we did have it bearish. Is it still there? No, the Nasdaq actually seems to have fallen off. So let's have a look at the scorecard and see what the situation is here. So it's -3. So again, the 3 pillars actually do lean more towards the bearish side. We've got very bearish economic growth. We've got bullish inflation data and very bearish jobs market. So that's okay. Retail sentiment largely on the long side. So, you know, it does say neutral. Obviously, I'm guessing that's just the bandwidth that they allow for the reading between the percentages. So if we remove that and just go off what the actual data is, they are majority on the long side. So being short and against them makes sense. But again, as I said, it's not something I really care too much about. Technicals are bullish. I also don't really care about the technicals. So let's have a look at the charts. What is going on here? Yeah, so it might be, well, not might be, it is too early for me to do anything really. What I would want to see here is a new low get printed somewhere. So this is what we were looking at yesterday, and this is more just a visual example, not an actual forecast of price levels. So I'd need to see a low get printed. Let's just, again, hypothetically say it's here, then a retracement into a fib zone like this, and then the continuation lower from that point. This is the only approach I can take, and the reason I'm not interested right now is because the H4 trend here is bullish. We've just flipped on the moving averages, and we are showing a rejection here around the 200 on the H4. The daily as well is also quite bullish here with the moving averages as well. So it's just not something I think is ready. I think my idea really on you know, AI and tech and things is that it's due for a burst at some point. But the problem is it's not something that I'm willing to put money on at the moment. So while I do agree with a bearish bias long term, short term it's not enough for me to do anything with. So I've kind of just got to sit on the sidelines. If the Nasdaq pops up bearish again and we get that set up, then yes, I will be looking to take a position. But at the moment, again, it's just a little bit too flat for me. Am I still in pound CAD? Good question. Again, because I'm away from my desk, I'm not really caught up on what's going on here. So euro dollar has been stopped out. I was aware of that one. Dollar yen is still on the go, still in profit on this one, so that's fine. I don't really care what it does short term. I'm really just playing on the carry trade dynamic with dollar yen rather than it being a technical play. So the technicals behind this one were super simple. Obviously, we come down to this sort of trend line area, rejecting the 200 moving average, and you know, a very simple sort of pattern play with dollar yen, and again benefiting from that carry dynamic where we get paid to be buyers. Gold is running really well. Pound CAD though is what you asked about. So yeah, I am still in pound CAD, but it's not doing anything. so this is a little bit of a sad, pathetic trade, to be honest with you. There's not really anything I can do about it. So let's just see if it's still on the Edge Finder. I think it's disappeared actually. So yes, this might, oh no, sorry, it's not. It is still bullish. It's down at the bottom here. It's only 4 though, which isn't good. However, what I've just noticed is it's gained 2 points in the past 24 hours. So I am still willing to sit in the trade for now, but yeah, it might just turn out to be a bit of a big L. The Aussie US dollar position, however, is doing really well. So I've trailed my stop, so I've not marked it up on the chart. My stop is currently now just below this previous low, and I'm just going to let this trade run because it offsets my euro dollar loss. It compounds into my gold long position as well, and also into my dollar yen. So I'm quite short on the dollar actually at the minute, which obviously was intentional, but it kind of wasn't as I expected. You know, these setups just came. Edge Finder supported all of them except dollar yen actually. So yeah, I'm quite happy to really just sit how I am and see what happens. As I said, I'm not expecting really anything supportive for the dollar tonight. So, you know, we'll see how it goes. Gold shot up like 1,000-ish pips this morning, starting at 8:30. Is that just because of FOMC later? No, hold on. My apologies. It's quite warm in the UK again today. So I can't remember exactly what it was here. Matthew said it. The news that made gold shoot up, it was the US Treasury announces increased sizes of nominal long end. So yeah, gold is doing very, very well on the back of that, and also the dollar is really, really struggling. So something we were looking at yesterday here is the fib from the low to the high, and this is the only bullish case I could find. Again, as we were discussing yesterday, the rate hike idea is getting priced out. We've got really weak data for the US. So there just really isn't that much. The only real supportive thing would be the Middle Eastern situation and this technical setup that we're looking at in the fib zone and the sort of previous highs here on the weekly as well, which clearly, in hindsight, haven't held up. So, yeah, to be honest, I don't see a reason to be buying the dollar at the moment. It just seems weak, really, on all fronts. So actually, let's take a quick look at oil. Yeah, so oil's catching a bid, but it doesn't seem to be enough support for the dollar to catch a bid really at all. So I think the markets at the moment are pretty much on wait and see for FOMC at the moment. So again, we'll see what happens after that. But yeah, for now, I'm happy to just sit on the side. Oh, someone just got banned. I wonder what they did. Oh, spamming WhatsApp messages. Brilliant. When's gold going to drop? Don, man, I wish I could tell you an answer for that. If, yeah, I mean, it really just comes down to natural market mechanics. Markets don't just run forever. So if we look on the daily on gold, I don't think this is going to be a case of gold now just rally straight to 5,000. I mean, that could happen, anything can happen, but I would highly doubt that. At some point, I would expect, even if we climb higher temporarily, then come back and retest this level and continue higher, or if we come back down and retest these previous highs here and then go higher, we will see some sort of pullback at some point, but it's just a case of, when will it happen? And this is where patience comes into play, and pay. So, yeah, in my opinion, if you're not in a gold long at the moment, it's not really worth trying to catch it because gold is very unforgiving. So if you end up buying it here, saying, "Oh, gold's risen so much, we've got FOMC tonight. Let me just gamble on it. It's probably going to go higher anyway." You could be right, but then if you're wrong, it very, very easily could come all the way back down here. There's nothing stopping it really. So yeah, I would just take caution. I don't think it's worth jumping into any positions on gold right now. 2288 says he's also stuck in pound card. Unfortunate. Euro pound is hovering near the fib. Is euro pound still bearish though? It is. So it's got -4. -4 really is my cutoff point. It's not something I really like to rely on. I mean, I know pound card was +4, but I'm already in that position, so I'm gonna have to hold it because it's technically still bullish. What market did you say, Christoph? I was talking and completely forgot what you said. Oh, euro pound, that was it. Okay. So yeah, euro pound, if it's got -4, it's not something I'm that interested in being involved with, to be honest, at the moment. The score is just too weak, is what I'm trying to say. Now, the setup technically looks fantastic. We've got the daily bearish trend here. We have the moving average cross, 200 above the 50. We're in a downtrend. Great. We draw the fib from the high to the low. We're currently around this 50% retracement and the 50 daily moving average. Great. Technicals look fantastic. Fundamentals are bearish, granted. So I would say this is probably a trade worth paying attention to. The only thing I'm really kind of thinking here actually is, could this market come slightly higher, break the fib, but actually want to come and retest these lows over here and then continue lower? So I think what I'd rather do is just wait. I think I would really want to put money on this idea where we actually break a little bit above the fib, retest this structure, and then if we close back inside the fib, then I'll enter a short position. And that just mitigates a little bit of risk and gives me a potentially better entry. So rather than entering like this and having this situation where it does do this, I can actually mitigate, 40% of this drawdown potentially, and then enter maybe here instead and get a slightly better entry and potentially avoid some of that drawdown. So yeah, that would be my approach. Looking for Eurostar. Euro dollar. How did Eurostar turn into euro dollar? Oh, so you wanted to buy euro dollar? Interesting. I don't mind the idea of buying euro dollar. I think it's pretty solid. The setup's kind of similar to gold, really. We could definitely take a look. But I've only got 10 minutes. I don't have my usual 1 hour slot, so I'm gonna have to figure out what it is we're going to look at, because obviously you've got guests coming on after me, so don't worry, it's not like you're going to get ignored. Did you expect gold to go down? I have a sell position. Please advise. No, I can't advise you legally, unfortunately. No, no, I didn't expect gold to go down because, I'm buying it, so that wouldn't make sense. But as I said, I think we are due a pullback at some point, but it could be, it could be right after FOMC. It could be next week. It could be next month. I don't know. I'm not in the job of trying to predict when a market will pull back or not. My job is to find the pullbacks, identify them when they're or when they've sort of bottomed, if you will, at the fib, and then execute. And that's kind of all I do. Silver's ready to explode higher. My friend, I think it's already had a bit of an explosion higher, but yes, I wouldn't disagree with that. I do think that gold and silver, there's fantastic asymmetric risk there. Essentially, what I'm trying to say is the risk to reward ratio is fantastic. I think, if we got silver maybe back towards the 100s, 120s, and you managed to get into a position, let's just hypothetically say you got in here with a stop loss below the lows, and silver goes back to its, let's say all-time high around 116, to keep it a little bit conservative rather than going all the way to the top of the wick at 120. This could be, 1 to 6.5. And that's if you execute exactly like this. So I'm sure you could maybe even get it a little bit better with scale-ins and things like that and trailing stops. So yeah, I'm very optimistic on the metals, but it's really a case of patience right now. I think the worst thing you can do is be bullish, but then not have the patience to sit and actually wait for the setup and just trying to jump in, because specifically gold can be really, really expensive. If you have a $500 account, you're trying to just go in, you're going to lose pretty much all of it, especially if it starts pulling back. You're right, I started trading this year, and this is the most important lesson I've learned. No FOMO. If something is rising fast, you miss a good entry, just sit back. Exactly, that's right. For CAD Swiss short, you wait for a bullish 4-hour candle? Hold on, let me remind myself what's going on there. CAD Swiss short. Oh, right, Christoph, yes. So, yeah, if we were looking to be buyers, I think this is what we were looking at, wasn't it? Fib from this low to the high. In this case, I would want to see a bullish 1-hour candle close. A 4-hour candle, the reason I would avoid waiting for a 4-hour candle close is because we've had such an impulsive move to the downside. I would be a little bit concerned that we might end up correcting slightly too high for me to then get in. So, for example, if I wait for an an H4 candle close, I could end up getting in here. Really, I'd want to get in around here. Now, I know that's really pedantic, but in this specific case, I would use the H1 and wait for a bullish candle close here. That's not something I do very often, but again, in this specific case, I would be willing to just drop down timeframes a little bit. Fed Jackson Hole and OPEX, yeah. Euro pound is a good level to short. I'm eager to take it. Yeah, I like it, but again, I just want to wait a little bit and just see how it reacts at the current level. In addition to daily cycle lows and a bit of too frothy short term. Talking about gold entries. Okay. I'm not yeah, I don't really get the daily cycle lows. That's not something I've ever learnt about, but yeah, you do you. If that's something that works for you, fantastic. But yeah, either way, I sit on the bullish side. What's also interesting, actually, is silver is now more bullish. Actually, no, it's not. Sorry, it's the same as gold. It's not more bullish. They've both got scores of 10, which is again one of those things that sits in the what's the word? Sits in the basket of the buyers, looking to be buyers of gold. It's not just that we've got the weak dollar, Fed hike getting priced out. It's also just the raw fundamentals of bullish, which are fantastic. So Australian dollar, US dollar remains very bullish here with a score of 7. That's great because I'm already in that position. Pound yen is very bullish. The problem is with pound yen, I think it's already risen too much really for me to do anything with. So yeah, I would say pound yen is still a good buy, not financial advice, of course, but I wouldn't mind. Yeah, I wouldn't mind still being a buyer on the carry trade dynamic here, but I'm already in dollar yen, so I'm not going to do it. But if you're not in a yen pair, and again, this isn't financial advice, it's just my opinion, I do still like the idea of just being a buyer on pullbacks, which is why I'm happy to sit through dollar yen's turn down that it's had today. So that's my current perspective really across the board with all yen pairs. There's really no other caveat or nuance there, I don't think. maybe Swiss yen is probably the weakest one, just because the S&P's rate is 0. But other than that, I think we're chilling. Hey James, I know you probably don't trade Bitcoin, but it's up in the short term. Yeah, so let's have a look at Bitcoin. Yeah, it is up really nicely today, actually, isn't it? Yeah, so in the in the short term, it does look quite nice to be a buyer. The problem I've got here with Bitcoin, though, is just when you zoom out, we're still not looking good. We're still in a really bearish daily trend. And yes, we've had a great move today, but we've still created these lower highs. There is no sign here for me on this daily that we're really doing much. The H4, again, just really isn't doing much. Yes, we've had the move to the upside here, but overall, the moving average is still sideways. We are kind of still in this range. If we take the very top of the range, we're not really broken out just yet. We might do later, but at the moment we are still stuck sideways. So for me to get interested, I would need the edge finder to be bullish, which I don't know if it is at the moment. Is it? No, it's not. So we don't have a bullish reading for Bitcoin. So that's, first of all, no interest there for me. On a technical side, I would need to see a significant push higher, then a higher low get formed. Whether it's actually something more like this, where we either just create a very simple higher low, or we come back and retest the top of the range. That could also be another option. Either way, if we could see that with a trend change with the moving averages, then maybe I could be interested in being a buyer. But that's quite a lot of criteria for Bitcoin to meet. It needs to break highs, it needs to create a higher low. We then need to also see the edge finder bullish, and I also need to see the moving averages cross. So that's a lot of things for Bitcoin to meet, really, which might be a bit optimistic right now. So again, it would just be really just a sit and wait, in my opinion. Hi James, hope you're well. Thoughts on pound Swiss and euro Swiss? Yeah, so actually, let me just quickly reference. Yeah, so the edge finder is still bullish on these markets. So I think realistically, being a buyer is still the best direction, because we've got this really nice technical setup here where we've come down towards the 200 moving average. We're sort of retesting into this range. The fundamentals are still bullish. You get paid to be a buyer, on the carry trade idea with the swaps. So we've got all of those things aligned. But then something I've been talking about, not even just with pound Swiss, but it's really across the board with all Swiss pairs, or at least most Swiss pairs. When you look at the weekly timeframes, they're really bearish, and we very rarely hold above the 200 moving average on this weekly. And when we do, in the rare situation we actually do hold above it, we then very quickly revert back to the downside and continue this longer term downtrend. So to be honest, given the fact that pound Swiss is now so close to its 200 weekly, I just don't know if I want to be in this. I think I would actually rather just wait and see if the edge finder can actually get a bearish reading at some point. That might not happen. We could end up just I could end up just waiting and waiting and waiting. The market ends up continuing lower, and we never get that bearish signal. Fine, but I just cannot justify being a buyer given the behavior of this market on a weekly time frame. So hopefully that answers your question. Yeah, again, fundamentally, trend, technically, all look good to be buyers, but yeah, I just don't really want to be involved. Confused about yen, James. Can you kindly explain why sell yen while government are doing intervention with Japanese government? They're not. They did it once, and it doesn't do anything. So I've got 1 minute left to wrap that idea up really quickly. They can intervene all they want. I don't care. I don't think the markets give a single flying F that anyone's intervening. No one cares, because nothing changes. Okay, they've intervened. What does that do? Well, it doesn't do anything. Nothing's changed, because yes, they pumped money in, they bought yen. Fantastic. What does that do? Well, that gives me and other investors and traders a level that's cheaper to buy and hold. That's all it is. There's been no rate changes, no policy. The regime is still the same. So I don't see a reason for anyone to be buying yen. To be honest with you, it's doomed. The Bank of Japan's in a really difficult position. I've mentioned this many times. It's not as simple as, they're going to hike. They might hike to 1.25%, 1.5%, sure, but the yield gap will remain, especially if the Fed does end up hiking like the market's expecting in 2027. So yeah, that's my current stance. I think the yen is still still absolutely doomed. Anyway, ladies and gentlemen, that's the end of my segment. We have Tiger coming to take over the show. Don't go anywhere. Again, we've got a new guest, and we have Nick and Chris coming on later for FOMC to take over that with you. Guys, stay safe. Have a fantastic rest of your days. Don't get margin called. I'll see you all tomorrow. Yeah, see you later.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? How are you doing today? Let me know what you're looking at. Finally cooled down here in Kansas. We had a nice thunderstorm overnight. It's a whole 65 degrees right now, so it's a nice change of pace. Got the window open, getting some fresh air in today. It's a good day. Yeah, so guys, everything kind of shuffled on us here over the last few hours. Obviously, with those that bond buyback feature that they were talking about that was in the headlines today. They were jokingly calling Scott Bessent the hedge fund manager of the world, or of the country. So yeah, it just completely flipped everything for a loop. Actually, I was going to pull up some charts here just to give you a little bit of a 30,000 foot view of kind of what the situation looked like. Obviously, the story was the buyback on the bonds, the bond prices themselves. So we saw them skyrocket. This is the TLT side. And then, of course, the flip side to the yields right here in the middle is the fact that we got a big, huge decline on that 30-year yield. So dollar dropped really hard. Gold and silver spiked up really nicely. And we got a little bit of a spike on the indices at first. Nothing, not near as crazy as what we saw on some of these other assets, but yeah, overall, just a complete shuffle. And so with that, I was just kind of keeping an eye on. I just went over and took a look at my alerts. Had a lot of them hit. So like New Zealand CAD, this is one, for example. I was watching this supply zone here short, potentially, but yeah, I don't want to try to get in the middle or get in the way of this crazy volatility that we're getting right now. So I moved my alert from this supply zone up a little higher to this one here at the origin of this overall strong move down, and that'll be a new one I'm going to watch for on New Zealand CAD. So yeah, I just literally moved my alert from here to here. Euro yen, this is one that dropped right straight in demand. The second it touched it, that's when everything kind of reversed. So this just was way too quick of a move for me, guys. But you can see that it worked out quite nicely there. What I have over here, Aussie dollar. Yeah, this is one that had recently bounced into that overhead resistance a little bit, dropped down to the daily demand right here, and just started to creep up from there. But we didn't quite get down to that level, that 4 hour that I was keeping my eyes on more closely. But since we've kind of reshuffled a little bit, I like to go to the origins of where the news piece broke, where all that liquidity came in and where we saw those really, really, really strong up and down moves on some of these assets. And I like to tie my new demand zone to the base that happened right before that. So for Aussie dollar, as an example on this 1 hour chart, would be looking at this base and candle here before the obvious spike up. So I'll keep an eye on this now that I know that we've got a ton of liquidity that has formed these legs. So that's going to be kind of the look on Aussie dollar, Swiss yen. This was another one that dropped into that kind of daily 4 hour or daily 1 hour zone rather that I had drawn up previously. But again, just too volatile, dropped in and pushed away just like that. So that's that picture. Euro dollar. What did I have over here? I think, okay. So then, yeah. And on some of these pairs, it completely adjusts and shifts everything upwards, especially for these dollar quote currency pairs like euro dollar. Because as you can see, I had an alert all the way down here. So at this point, I need to bring it all the way up here. Okay. Move my alert, because now what does this kind of create? A little bit of a flip zone. Because remember, we had that daily supply that we broke through from back here. That was created back in the middle of June. And now that we've bounced into that supply and chewed through it, well, now I want to look for that flip zone. So I'm going to keep an eye now on this 1 hour basing structure. And I mean, there you go, guys. There's your 3 red candles in a row for your volume spread analysis. So that's what I like to see right after the basing structures that I draw up with my rectangles. So going to keep an eye on that, get that moved up here, get that a little more level. I'm a particular person. There we go. That way it's right on the proximal line of the demand zone itself. Euro dollar, pound dollar, kind of a similar situation, although it is kind of bouncing into that overhead, I think 4 hour supply that I've got drawn up over here. Let's go double check that. Yeah, 4 hour. So I would like to draw up the very same zone over here on pound dollar that I just drew up on euro dollar, like this, but I would prefer that it chews through the rest of that zone first. Just as simple as that. Okay. So let's chew through the rest of that, because that looks to me like it might be a fairly decently strong zone, especially when we look at it on the daily, because it pushed all the way down, broke structure in the bottom. So that will kind of be the projection I'll draw up for this. Let's break and close, then retest. But I don't think that's something I have to worry about on euro dollar. At least not right away. Because see, if I go back to a 4 hour on euro dollar, yeah, we broke through this supply, but now we've just kind of broken up through here and the next supply didn't get touched yet. So that's the difference between euro dollar and pound dollar, is the fact that pound dollar is in a supply, euro dollar chewed through the daily. So I think I'm just good for just a regular pullback on this. You can see the projection line I had drawn up previously. I drew this up with you guys live, and I told you that I don't know exactly where this demand zone is going to be created just yet. So that was just kind of projecting. Well, just so happens it's a little bit higher up. Okay, that's that 1 hour zone right there. So just pretend like I drew this picture like this, and that'd be the same thing, right? Demand zone there, and then that's where the new buy is. Okay, so that's kind of my up-to-date look at the moment anyway. At my main alerts. Again, New Zealand CAD, yeah, I went through that. Aussie dollar, I went through that as well. So that's kind of updating you on just some of the alerts, and I got to go and refigure these, and I'll do it after the stream is over. But excuse me. But yeah, guys, let me know what tickers you're looking at. Let me get caught up on the chat over here, and let's see here. What's going on, Jeremy? Aussie New Zealand gold, Jeremy. Yeah, we can look at that. Can you explain how the government is buying her own bonds? You know what? That's a little bit above my pay grade. They basically buy it, repurchase it, or something like that. It started off at $2 billion. They moved it to $4 billion. Yeah, I tell you what, the best person to ask is when Nick and Chris come on here in a little while. They'll probably be able to give you better details than I can on that. That's actually something I'm in the middle of studying myself. Studying up on the treasury bonds and, going and doing some back testing on that from the last times these episodes happened. From my understanding, it doesn't happen too often where they just go and double it up like that. but it is definitely something worth studying. So I'll go do my homework and I'll report back to you guys what I find. But in the meantime, for the quicker answer, I would say Nick and Chris would be the best one to ask on that. Heavily short Aussie ranch. Here's a funny one. Copy the CPI from Bitcoin AO. Okay, so it looks like we got Aussie Kiwi, we got gold a couple times, and we got Bitcoin. Are all Aussie longs cooked? Oh, I don't know. We'll check out some more Aussie pairs as well. Taking a look at the currency surprise index over here, guys, things kind of flipped on us. I need to refresh this actually, because I think Aussie actually moved to the top. Or it did at one point. Okay, maybe things had to recalculate. So yeah, so we're still left with the yen in the basement, the dollar just below or just ahead of it. Canada dollar, Aussie at the top of the list. Okay. All right, so let's go look at some of these currency pairs. Aussie Kiwi was the first one I saw from you guys, and I don't have my alert on me, so hopefully I don't blow into Alan and Marco's time here. Y'all remind me. I don't have my phone on me. Aussie New Zealand, let's go look at that. Dig a little deeper. I was just looking at that one this morning. And as far as Edge Finder goes, let's see, where was that? I think was that a neutral one? Or was that a little closer to the top, I think? Aussie New Zealand, yeah, +2. So you're getting a good, decent set of technicals and just the mixed data overall. Okay, nothing for eco. Sentiment -1. So this is just kind of another one of those cases where the moving averages are just kind of hugging each other, guys. That's always where my eyeballs go to first, just because it's the quicker way to look at trend. Now, ultimately, what do I care the most about? Higher highs, higher lows, or lower highs, lower lows, right? That's really where I make my trend decisions based off of is that. But but that's why I like the EMAs so much, because it'll just at a glance right here, I can see they're hugging. I'm automatically like, okay, we're getting a little bit of mixed results of late on this particular daily chart. So yeah, we've got lower lows, lower highs. We've got no score on Edge Finder. However, it's saying the technicals are up, and that's basically because of this most recent price action here. Yeah, I don't know. This is all kinds of crazy. I don't like it. It looks to me like the last thing it did was bounced into some higher time frame supply over here. We got a couple big wicks. Now we're obviously getting a big push down, partially aided by that bond buyback story that we're all hearing and seeing first thing this morning. So if this thing's indeed trying to figure out a way to trying to bounce from this supply that broke structure over here, well, perhaps I would probably at least want to see one more structure broken at minimum if I'm trying to short this, which I'm not. And that's this one right here. Break below that, because we do technically up here have on this 1 hour, or this 4 hour rather, we do technically have a lower high. Now I would want to see a lower low, break and close anywhere below that before retracing back to some potential supply zone like this one up here. But yeah, this is just too neutral and it's too mixed a data for me to get any kind of a read on this for you. I think there's probably better pairs out there, even Aussie pairs. Aussie yen, though, since you brought up Aussie pairs and somebody asked if they were cooked, this is one that, first of all, has given us a plus. I got one of my cat's hairs on my nose, a +5. So this was one I was definitely looking at. And it had dropped through just like all the other pairs did with the bond announcement. It dropped right through this demand, but had a very strong reaction and closed and actually started pushing up. So, hey, I kind of like this. Now it pierced all the way through the zone. That's no question. But with the retracement of it, and what I was looking at earlier on the macro surprise index, it showed Aussie at the very top, yen at the very bottom. But now, I just refreshed this, and now it's showing it at 60%. So I don't know. Maybe the algorithm was doing some calculations or something. But anyway, I was kind of debating on this trade right here, guys, to be honest with you. When we change a character to right here, okay, and then got another retrace, this kind of looked like a little bit of a trade opportunity for me based off of that zone of demand right there. So the potential red flag on this is, of course, the fact that we did bounce into the overhead 2-hour supply. Now we're getting down into a little bit smaller time frame. Talking about this one right here, where we had a big red candle down, okay, big VSA candle. That was one of those intervention moves towards the end of July, I believe. And now we've retraced and kind of bounced back into it, but then bounced into demand, wick down, very, very strong bullish close on this 2-hour, 4-hour, 1-hour candle right here. So this, to me, looks like a good potential spot to go long. I'm still trying to figure it out. Perhaps if we break that structure right there a little more forcefully, might even be a kind of like a 1-to-1. This isn't anything where I'm going to be going for like a 3-to-1 reward risk, but just like a 1-to-1, taking it back a little higher to overhead supply. So anyway, that's what I was looking at there. You asked about gold and silver. Yeah, these things have just been going crazy. Now, the way I see these assets is obviously we're still trying to chew through the remnants or the last little bit of this supply that I was keeping my eyes on over here. But if we break through that and close, well, same thing as always, guys, just looking for a retracement. And this is going to look very similar, I think, to pound dollar and euro dollar, because if I look down here at the origin, right, of that move that happened right before the announcement, hey, this is what I like to see. I like loud, obnoxious noise like what we just got, because it creates all kinds of liquidity for me. So I'm going to put the same rectangle around this candle here, just like I did pound dollar and euro dollar. This is going to reset things, I think, just a little bit, because at first I was going for a retracement a little further down to some of these. Remember, I was talking about this zone on top of a zone a handful of times all the way at the bottom. So this might reset things a little bit, but it'll definitely help if we break and close above the last little bit. That's all I'm asking it to do. Last little bit of this supply, and then retrace back to demand for buys. In fact, I'm going to delete that one. Just leave it more on the actionable time frame. But yeah, just like James said at the outset of the show, guys, it's going crazy. Yeah, we want to buy gold. Yeah, it is bullish. It's looking really good over here on the Edge Finder, but you're buying at some pretty high prices relative to where the origin of that strong move happened. So, we will ultimately get breakout buyers. Okay. There's retail traders out there. There's retail buyers that will be buying just because we break through this resistance point. So just keep that in mind, that as soon as they do, the banks are going to know this. They're going to know when price is up here. They're going to know where their liquidity is. And yeah, the retail traders may feel good about themselves for a little bit until ultimately what happens. Right? Ultimately, you get the retrace. See it all the time, right? Retrace, and then all I want to see is a discount. So just give me a nice discount down to demand where I know there's liquidity on the legs out from the news event, and we'll give it a shot. We'll give it a little bit of a shot. Okay. So that's gold. And just for kicks, we'll take a look at silver since we're here. Same thing as gold. Just needs to chew through this overhead supply. But what else has gold given us? What else has silver given us? A secondary supply right here. This is now a 4-hour, and that's currently where we're in. So we're in a daily supply as we speak. Did get that slight bump down. Excuse me. We touched that demand underneath, the daily demand, and that created a brand new supply. So daily and 4-hour supply. Scary place to buy, in my opinion. You're buying right into the jaws of liquidity. So, the way to look at it, again, shake out the weak hands that are buying these breakouts. And then always, no matter what your trading strategy is, it's always best to find some type of a discount or premium if you're trying to short something, right? You want price to go up to find a nice place to initiate your short. So that's gold, that's silver. What else? You guys said Bitcoin, I think it was. Gold moving. Yep, they're all moving. Bitcoin. Yeah, let's go have a look at Bitcoin. Look at that. Look at that puppy. Okay. Wow, what percentage is that? 5.8%. Ethereum up 8.6%. Now the currencies are all moving too, but the currencies don't tend to move near as big a percentage, guys, as gold, silver, and stocks, things of that nature. they tend to stay a little more mellow. That's why you see all these percentages over here, not really that big of a deal. 1% on Kiwi dollar, that's a pretty good move. That's a pretty big move. Doesn't sound like it when we compare it to other things like obviously crypto and gold, silver up 3.5%, 4%. Right? What else we got over here? Just want to take a look. Yeah, I think that's pretty well. At the indices, yeah, they're kind of retracing. So yeah, silver, gold futures, same thing. Nat gas futures moving quite a bit. But yeah, currencies are fairly subdued. But Bitcoin, on the other hand, and Ethereum, that's quite the move. What would I do if I were trading Bitcoin? Let's go look at the technicals. Now, I know the Edge Finder does give us a bearish vibe, I do believe, or it did at one time. This might have reset everything. Okay, yeah, I don't see it. So that must have went back to neutral. Bitcoin, yeah. Bitcoin -1, Ethereum -3. Okay. So it went from bearish to neutral. So that technically means it strengthened a little bit. And obviously the 30-year, this news event has pushed it higher as well. So because it doesn't really give me anything good on the Edge Finder, I would probably sit on my hands for now. But the cool thing is we finally broke out of what? What have I been blabbering about for the last, month? Been blabbering about this equilibrium. All this equilibrium, this sideways movement, this black hole. Well, that's quite the strong push out of that. And even this double top that we had here, and the call wall, or the call wall, that green line. That was a call wall I was telling you guys about yesterday. Every time we touch these call walls, or not every time, but a lot of time, well, suck in the longs and smoke them, right? In this case, we're pushing through a little higher. So I would still expect a retracement if I had a reason to buy Bitcoin. And it might even look like a very similar situation to all the other assets. Let's go look at the demand. Let's go look at the 1-hour candle. Okay, liquidity really started. So I would probably treat this as a 1-hour demand as well. I know it's not a red candle. It's a green candle. But we had wicks on either end of it. This would probably end up being my new demand zone right here. It's a flip zone also, right? Because we just chewed through the rest of this overhead daily and 4-hour supply. Right? So it goes from supply to demand, just like that. So that's like 3 or 4 flip zones I've already been able to create today because of the liquidity from the news event. Why is that? Moving average system. Okay. So yeah, that would probably be my new zone. You see, I've also got a blue dash line going through the heart of that. So what does that mean? Well, I've got somewhere in the past, I've got a former resistance or a support line. Okay. It looks like I had one way back here on March 28th. Which basically is what price kind of hugged all the way through this area where price got boring and sideways. So yeah, I don't have a bullish or bearish bias on this right now. Clearly it's getting that upward spike, but you can see how quickly this stuff retraces. This is a 1-hour chart and it's already retraced almost 2% before the candle even closes. Now we still got 7 minutes left on the candle, but yeah, I need a discount. If you're trying to buy Bitcoin, it's just like gold and silver. Yeah, they're spiking hard. We'll get this funky retracement. So you got to be careful about that stuff. And guys, before I do forget, Ola Prime, of course, does have their A1 Live code, their manual discount code. If you go to olaprime.com, if you're looking forward to saving some money on your first account, second account, third account, 10th account, doesn't matter. You can use that in. Just plug that manual code in there, A1 Live, get you a discount. You've got your QR code as well. And as always, guys, if you ever have any questions on that, X, okay, on X primarily, you can go to at Trade Like a Tiger, and you can find me there. And I'll be more than happy to chat with you. And I've mentioned it before, but I'll do it again. If you ever holler at me over there, make sure you say that you're from the A1 stream, just so I know you're not just a spam, because I do get a lot of that. That comes with the territory of doing content. Get a lot of spam here and there. So I don't want to ignore anybody. I don't want to miss anybody. So just clarify that. That's all I would ask. When is that going to retrace? No idea. Yeah, no idea. That's the thing. I'm not Nostradamus. I think the rest of the guys will tell you the same thing. It retraces when it retraces, right? Depending on how it retraces, when it retraces, well, that's when we have a move planned for it, a booby trap set. See, my supply and demand zones where I buy and sell from, those are my booby traps. I don't know if or when it's going to hit. When it comes to creating zones, you guys probably see if you go through the past, I've gotten to where I kind of delete them, old stuff, just to keep my charts healthier. But I'll set up zones all the time, and I might utilize 5% of them, 10% of them, maybe. Right? The reality is, you create a lot of zones, like I did here, like I did up here, and it'll either hit right away, or maybe it'll take several months, maybe several years. I've had zones drawn up on some of the currency pairs that finally, after 6-7 years, price finally arrived back to it. What happened? Got a bounce. Right? It bounced. So the zones, in my opinion, don't really expire. They get to where they have less and less relevance. But, at the end of the day, people remember those price points, especially the banks, especially the smart money that created those zones, right? So, I don't know. Just going to the weekly, like you mentioned, weekly is still down. That is a key thing to keep in mind as well. Breakdown, base, breakdown, a little bit of a retrace, breakdown. We went through this last little bout of boringness. So if you look at it on a weekly, we're technically in a downtrend. But remember, monthly demand right here, weekly demand right here. So that's your strongest confluence you can possibly have. And then we had the daily right here inside of all of those. We touched here, it finally chewed through the daily and the weekly, but we still have a daily further down here. That is still untouched. It's still fresh. And that zone was created September of 2024. Okay, so this is why I leave zones up, especially the larger ones. I don't leave 4-hour and 1-hour zones up very often, especially when we start getting weeks and months past it. But, daily zones, weekly zones, I'll leave those on for a long time. Unless they're just like a mile away from price, right? We're not at 16,000, so I'm probably not going to worry about it. If price ever drops that far, well, then I'll go back in the past and look at it, draw up a zone anyway. But this is why Bitcoin has been kind of going sideways for a while, guys. Monthly, weekly, daily demand all at once. So it's, this is a nice thing to see for Bitcoin, obviously, getting this gigantic move to the upside. But in the grand scheme of things, you go to a weekly, and it's nothing more than just a tiny retrace. So it's got to grow some legs. It's got to close. Get a daily, get a weekly close to the upside. But so far, it's still too new. Right? This is just a couple hours of price action. So that's the best thing to do. When in doubt, zoom out to get a better picture of how important that is or isn't. But for my time frame of trading, daily, 4-hour, this is obviously a 1-hour, I'm okay with a retrace. Hey, at the end of the day, I'm not selling the farm. I'm just betting a small percent. Say, hey, if we get a retrace, I'll see if I can take it back to the top. Right? The top of where it reversed on me. So anyway, that's kind of my thoughts on that kind of stuff there. Sudden spike of gold, is it only because of the dollar drop? Yeah, so basically they buy bonds. They doubled up their bond purchases, which I think September 11th or 9th or something is, I think, when that takes effect. So when they buy bonds, bond prices themselves, the actual bond, those prices spike. If I go back to my chart over here, the TLT, okay, this is your 20-year, this is one of the bonds assets. There's a few, but this just so happens to be one of the ones I look at. Bonds jacked up in price because of the promise to double up. Okay, an extra $2 billion in the bond market. It might sound like a lot. It's really not, but it's a good piece of news. So bonds moved up. When the price of bonds moves up, yields have the opposite. Okay, I got the 30-year yield up here because this is the one that touched our highest level since the Great Recession of 07, 08. So bond prices jacked up because hedge fund manager Scott Bessent went and placed a $2 billion order. Prices jacked up. Bond yields fall. The dollar falls because of the yields. And gold and silver have the opposite effect because of the dollar dropping. And its reaction, just like the dollar, to the price of yields and the price of bonds. So at the end of the day, if you can understand bond prices and if you can understand bond yields, how they have the opposite effect, well, that'll pretty much tell you, especially on a chart when we have these headlines, that'll pretty much tell you how most of the rest of the assets are going to go. So the bond market goes, pretty much everything else does. That's another good question to ask Nick, because I think he'll be able to elaborate on that a lot better. But, you know, the question always comes up, well, how do I know what other assets are going to do when stocks go up, when Bitcoin drops, when the dollar bases, when it flies up? Well, I think the easiest thing to do is just see what the bonds themselves are doing. Bond prices, bond yields. So, guys, at the end, that's end of my show. I'm already running a minute over. You got Alan and Marco coming up, and then you got Nick and Chris to follow. So, the big finale is on its way. Ladies and gents, take care out there. Stay safe, and I'll be back tomorrow.
Today's video is sponsored by 8cap, and did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Good morning, A1 Trading. How you guys doing? What a morning today was, huh? Lots of volatility today. Bond market stuff. You have Scott Bessent here looking to buy back more of those long-dated treasuries. What a morning. You have the DXY breaking a super key level here. This 200-day moving average that I've been watching, breaking this level. You also have gold here testing that 200-day moving average as well. Curious to see if there's some follow through with that. If there is, I may have to shift my approach to waiting for a pullback on gold to waiting for a break and retest. So I'll make sure to cover everything here with you guys. It is going to be a fantastic morning. And also, too, we have FOMC meeting minutes as well. So I do expect a lot more volatility to come. So this is probably just the beginning of it. So hope you guys are doing good. Good morning, Kier. Good morning, Tony. Good morning, Thornier. Hope you guys are doing awesome, man. So let's talk about what happened. The elephant in the room, okay? The Treasury and its buyback of these bonds. So what's going to be happening here is, or what was announced was, the Treasury announced that they were going to be increasing their buybacks from 2 billion to 4 billion. And so we have to remember that the Treasury and kind of this was a big liquidity event. And how it works is the Treasury constantly issues new bonds onto the market. Like every day they issue new bonds to go ahead and fund the government. And what ends up happening is you have these as the timeline progresses and they issue more new bonds. There's some old ones that are harder to trade. They get stale. They're not as attractive, right? And so you have them kind of sitting there. And so the Treasury is going to basically start buying back those bonds. And it's not going to be quantitative easing. From my understanding, the Fed's not going to be involved. The way they're going to go ahead and purchase these bonds and up their spending is by issuing more 2-year notes. So by issuing more 2-year notes, they're going to take those proceeds and then use those proceeds to buy back the old bonds that are kind of just stale and no one likes to trade them anymore. And how that can be a liquidity event is the best way I can explain it is, let's say that you are a portfolio manager and you have $10 billion worth of these long dated treasuries that have been on your books for a long time, and they're very, very old, and it's hard to trade. And let's say that you want to invest into other assets that yield more, for example, hyperscalers or equities or whatever the case may be. But you have this 10 billion here and you want to offload that. Well, what the treasury is going to do is they're going to specifically target those long dated old bonds. And so they're going to buy them back, right? So for you to sell those bonds, if you're a portfolio manager and you want to sell those and take those off the books, you need someone else on the other end of the transaction to buy it. So the treasury is going to effectively start buying those bonds back. And so as the portfolio manager, you then recoup that money, right? You get the proceeds of that sale, and then you can go ahead and start deploying that into equities, hyperscaler, whatever it is you want to do, right? So that's how it can be a liquidity event. So the Federal Reserve is not going to do quantitative easing to give you that surplus that you need to go from 2 to 4 billion. What's going to happen, from my understanding, is the Treasury is just going to issue more of those 2-year notes, and with those proceeds, they're just going to start buying back these old bonds. So for a lot of people that have these older dated bonds on their books, they're going to be able to offload that and get that money and start deploying it elsewhere. And so that's why you're having a risk on day. Clearly, you're having the dollar down, you're having yields lower, you have the equity indexes are green on the day, you have gold up today. So that's pretty much what's happening here. So this is going to be very, very good for risk on, and it only adds more fuel to the current thesis that we're talking about, which is, we've been talking about this for a long time on the stream, which is, the dollar story starting to soften up a little bit, right? So it's only going to add more fuel to that. You'll probably see a continuation bid in gold. You'll probably see more risk on in equities, which to me makes it difficult because yes, you're having more liquidity and stuff like that into the market. And yes, you're probably going to have more cash being able to deployed. But I do think that a lot of people, myself included, really wouldn't want to be buying equities at these highs. But nonetheless, you're boosting liquidity into the market. It's a risk on type of thing. So that's what I'm going to be trading with. So as far as my positions go and how I'm looking to proceed with this, I had 2 positions on. So I had euro dollar, which got taken out for a profit here at the 200-day moving average. I was actually not quick enough. I didn't even have my phone with me to kind of move my take profit higher. So I got taken out for a profit here whenever the announcement first came out. The second one is dollar Swiss here. I'm still in this trade. So what I'm going to do is I'm going to trail profits here. And I'm looking to, if you have that continuation and dollar softness goes, I do want to target the 200-day moving average here, which is 0.79200, you could say, right here on dollar Swiss. And so I trailed my profit here below this level of structure. So this was previous support here. I'm sure that with the volatility from FOMC, you'll probably have a retest of this level here. So this will probably be support, turn resistance. And all I want to do is make sure that the level actually does hold. That's why I have my stop loss trailed into that profit. And if it does hold, then I just continue to let this thing run in my favor and continue on. But nonetheless, I'm still bearish on the dollar. And with gold here, different scenario, right? So we're actually having to, I'm having to kind of reposition and repivot my way of thinking with gold. So initially I wanted to get a deeper retracement, right? We wanted to buy it at a relatively strong discount. But now that we're seeing a lot of momentum in gold, when gold has its momentum, it really has that momentum. And so I think the approach for me is going to be shifting from waiting for a deeper pullback on gold to waiting for a break and retest. And the level that I'm looking for a break and retest is going to be right here with this 200-day simple moving average. So if you were to get a break of the simple 200-day and a retest, then I would be very confident in buying that and continuing higher. So they're both scenarios include waiting for the technical structure. So we have the fundamental picture working in our favor, but you need the technical structure as well. So I either want the pullback or I want the break and retest. But without those two, I'm just not going to act on that. So that's pretty much how I'm positioned here. And also too, with the euro dollar, I did put a limit order here. Did I put it on my FTMO account? Yes, I did. So with euro dollar, I have a limit order here as well. So we did break that 200-day moving average, this level of resistance here. So if we do have some volatility and it takes us down to 1.162, I'll be placed in a buy order here, and then I'll be taking it to the next level, which is 1.18. And then my stop loss is down to 1.15. So essentially, I'm looking to re-enter euro dollar. I'm going to continue holding dollar Swiss short, and then I'm waiting for a technical confirmation in gold. Pretty simple, right? Pretty simple. pretty simple. So that's what I'm waiting for. Let me read the comments because I did go on a little bit of a tangent. Oh, you cut gold? I did. Well, I didn't cut it. I actually got stopped out. So I had my stop at break even. When we had this drop here in gold, I got taken out. So I didn't lose anything, but I'm also not participating in this recent rally here. It's up 3.75%, which is crazy. So that sucks. But again, I have dollar Swiss running, doing quite well. I had euro dollar take me out for a profit. So I can't complain, but I am seeing a little bit of FOMO here. And I did get taken out for break even, and then gold recovered shortly thereafter. Will gold go up or down in the meeting? It's going to do both, man. Dinosaur in the room at this point. That is very true. Alan, what currency are you looking to take advantage on this USD weakness? My favorite one, Tony, is going to be, well, with this one, I'm in the trade still. I'm still in the trade. Dollar Swiss. I love it. I'm going to continue holding that thing. The next best would probably have to be euro dollar. So with euro dollar, could present me a re-enter opportunity. So I'm waiting for the pullback to that 200-day moving average. Dollar Swiss, if hypothetically you were not in dollar Swiss short and you wanted to participate, I think waiting for a pullback into this level of support turn resistance will be pretty wise as well. So seeing how price reacts to the 0.80200 level. So if you do see like a reaction in dollar Swiss today, tomorrow, sometime next week, right? If you trade into this level and it actually holds as resistance, then that's how I would look to go ahead and add more size to the trade. And that's how, if you're not in the trade, you can get into it fresh. Let's see. Your DCA shorts on UJ are fully in profit. Yeah, man. Everything against the dollar is really hurting here, UJ included. So you guys know this. I'm looking to actively start buying UJ on any meaningful dips. So this is only helping that. We are at the 200-day moving average now. We are still before the FOMC meeting minutes. So depending on the outcome of that, you could also see continued downside in UJ or a bit up. We don't know. So I'm going to be waiting for that. But nonetheless, I do want to start building a campaign on dollar yen to the upside. So it's just a matter of getting some pretty good discounts. You are at a good discount right here. You're at that 200-day moving average. But my only worry is if you do flush below this 200-day moving average, then you could probably see a revisit of 155. So that's why I don't want to get into it prematurely. I would rather wait for a revisit here. If you do break that 200-day, then I just get a better cost basis. So that's what I'm waiting for, UJ. But another good setup, which is contrary to my dollar short, right? But if you look at UJ relative to, for example, dollar Swiss or dollar CAD, UJ is holding up relatively well, and that's because you have the carry trade dynamic there. So I do like this one for a longer term DCA, building a position slowly to the upside on UJ. Geopolitical update. That's a great question. I don't have the latest on the US-Iran stuff. I kind of think it's taking a back seat, if I'm being honest. Check Bitcoin. It's shooting right now. Let's look at Bitcoin. Ooh, it's at that 200-day, guys. Should I do it? You guys know what I'm doing. Let's see. 200-day moving average. That looks quite well. My only thing is it's been very active to what's going on in the bond market. But I did say that I was going to short Bitcoin. Let me go to the FTMO chart and see what it looks like. On FTMO, it's not at the 200-day. That's weird. Why is that? Why is that? Huh. So is the 200-day up here or down there? I want to short it though, guys. You guys know me. I want to short it. Why is that the case? It's up 6% today. I'll think about it. That's throwing me off though. Why are my moving averages the same? The inputs are the same. 200 length close SMA 21 day, and then 200 close SMA 21 day. Yeah, they're the same. Why is that? Why is that the case? All right. Well, I'm just gonna wait a little bit. I'm not gonna get into it. I have some pretty monster positions, so I don't need to add anything, but I'll be watching it. Hey, Marco.
Yo, what's up?
What's going on? What a big day today was or is.
Yeah, I thought we were gonna have another slow day, and we're gonna have to change the topic. But it looks like something did happen.
Yeah,
So,
man.
Damn, that's a big move on dollar Swiss. Whoa,
What are your thoughts?
big one. So the news was, you probably went over it already, but the news was that the Treasury will basically introduce more demand into the bond market. So I think like Scott Bessent, the main guy at the U.S. Treasury, he probably got tired of reading all the headlines that like the bond yields at the long end is going up and up and up. Like if you look at the 30-year yield, it's just going up. So to try and control that, he has a bunch of tools in the toolbox. He can do a lot of things. One of them is increasing the demand for the US Treasuries. So if you increase the demand, price goes down. Sorry, price goes up, and yields go down, because there's an inverse relationship between the price and the yield. And yields going down is considered bearish for the US dollar and bullish everything else, because like the reason you would buy bonds is if you can get a better return than, let's say, buying stocks, buying Bitcoin, buying gold, and the yield for the currency is basically connected to the yield. If the yield is high, people will want to have the US dollar. If the yield is getting lower, people will sell the US dollar. I think those are kind of the basic mechanics behind it.
Mm-hmm.
The only thing I can't really explain is the Swiss having such a huge reaction. Like that's massive. That's a big one.
Don't have a reason, Marco, why the Swiss franc got strong relative to everyone else. My only kind of where my mind lands is just the next best thing. So that's where I'm going with it. It's a neutral as far as geopolitical goes. It's a safe haven. You don't yield much, but it's a safe haven. So that's kind of where I kind of see that. Maybe also too, you had some crowded positioning too. But I think Max mentioned that out of all of the currency pairs, though theirs was like the most heavily shorted. So when you have crowded positioning like that, something like this that can ripple some feathers can really start to show itself. And I think you're just seeing maybe kind of both of those things happening, where you have the dollar softening, but then you're also seeing that happening with Swiss franc. But I was definitely not expecting a move like this. One thing I will say, Marco, when Swiss franc when dollar Swiss gets to trending lower, it can move really quickly, and it's really hard to stop. So I kind of have this FTMO position. I kind of did both things. So for transparency purposes, I had basically dollar Swiss short this exact same trade, but on my personal account. So what I did was, on my personal account, I took off the profits from this trade, and then I have a limit order right here. So in this level of resistance. So if you do get some volatility today from FOMC, then I can re-enter the position if it takes us there, and then I can just participate once again. On the FTMO account, I didn't take the profits. I just trailed them. So I basically secured profits on the actual account, and on the FTMO, I'm just trailing. And the reason is because if this does want to continue going forward to the downside, then it's going to give me more profits, and then I'm just closer to passing the challenge account. So that's why I did that. And then with Eurodollar, frustrating enough, I got taken out right here. So like I didn't move my take profit or anything like that. Like I was doing something, and so I didn't see what was going on. And so I come back and I see that my position's off on Eurodollar on both accounts. So with this one, what I'm looking to do is just re-enter on the pullback. So similar to dollar Swiss, if FOMC meeting minutes gives us enough volatility to the point where you have Eurodollar kind of revisit this 200-day moving average, I have a limit order, not just on my FTMO account, but on my other account as well, to have a buy limit order right here. And then I would target 1.18.
Amazing. So you're probably pretty close to the target, I would suppose. You're phase one, right?
Phase one, yes.
Phase one, cool.
Now, what happened?
Story.
Sorry.
Yeah. No, go ahead.
Let me say this. Well, it's frustrating, Marco. I would have been very, very close, but I had gold here. I had trailed it to break even. And so I had price took me out yesterday, and now we're up 3.7%.
Yeah. That it happens. It happens. But gold, big explosion up today, really unexpected. Probably going to cross the 200 SMA. And if it does, we can go to 47, 4,800, I would say pretty quickly. Just a funny story. So way back in the day in like 2022, there were traders who were doing FTMO, and instead of just closing their positions when they hit the profit target, they let the trades run because they said, like, this is my plan. You know, it's my trading plan. I'm going to let it trail. I'm going to trail the stop loss, and I'm going to keep it until the full position, until everything is over, like I would on my personal account. And that would be so stupid because they could have passed the phase one and then they just let it run. And a lot of the time it came back and they went back below the target. So like some people, you know, just don't understand the game. So that was pretty funny back in the day. Nowadays, people pretty much catch on to the prop firm, let's say, structure and how to pass it, and to not to gamify it, but to kind of treat it more like a game than an actual personal account.
Definitely, you have to gamify it, I would say, just because of the rules, right? Like you there's rules. Like, who would have thought? But on your brokerage account, there is no rules. It is what it is. But for sure, so that's what I'm doing with that one. How about you, Marco? Are you looking to add any positions? Do you see anything new here, or are you just kind of letting it play out and let the dust settle a little bit?
So I have Aussie dollar longs, which I entered fortunately before today. So let's bring that up on the stage. Aussie dollar. So I took it this morning because I noticed that the price was kind of close to this lower trend line. And I have been talking about this position for a while now. This is more of a long-term hold. And the main bet behind it was that the Fed was going to be more dovish, that you will see a downturn in the US economic data because the capex is supposed to trail off in 2027. So, and the fiscal spending for the US government, essentially, the fiscal spending is supposed to be a drag on the GDP in 2027. The capex is supposed to be much not lower, but the growth of the capex will be lower. So the GDP in the States should experience a bit of a downturn. Now, that is bearish for the dollar. Inflation doesn't seem to be going up above 3 point something, which is fine. Like, the Fed is not going to hike 3.4% inflation, trust me. They're going to hike like 6, 7, 8% inflation. 3.4, that's nothing to them. So a repricing is needed there. Market still thinks we get a rate hike this year. I would say it's 90 to 95% certain that we won't get a hike. So that's the bet. Basically, sell the US dollar. Aussie dollar seems to be a good pick. I'm looking at some more pairs and trying to see what else can I buy against the dollar. Like the euro, big explosion up. Personally, I kind of don't prefer the euro because Europe is heavily dependent on importing energy for heating. Winter is coming up. Oil prices are elevated. Energy prices are elevated. All of that can bring a drag on the GDP for Europe, and it can bring the euro down with it. So I would say the euro is not such a great currency to buy. Dollar Swiss was probably an amazing currency to sell. I mean, just this daily candle is massive. It's like an intervention, basically. But chasing it here, I don't think is the right way to go. I think actually a good target would be above 0.79, something like that. That would probably be a good initial target for the dollar Swiss. So I'm still a bit on the fence as to what's the next move. So I've positioned Aussie dollar longs. I want to buy gold as well. But what's the next currency to buy against the US dollar? That's probably the question.
My favorite would probably be dollar Swiss. Because I basically took the profit on my personal account, I'm actively looking to get into that position as if I wasn't in the trade, right? So like for me, I see this candle and it's a beautiful candle to the downside, but I know that things don't move in a straight line to the downside. You'll probably see some kind of retracement. So for me, it's just a matter of like, all right, what are some good levels here? If you do retrace, to go ahead and enter short. So I like 0. I don't know, depending on how you measure this out, but I like this level right here. This was previous support here, turn resistance. So If you were to get a pullback into this level, then on my personal brokerage, I would be looking to re-enter dollar Swiss short. And like you mentioned, right above that 0.7900 level, I like a lot. So for me, the structure looks like this. You have this level here, which was previous resistance once, twice, 3 times, 4 times. You broke above it, you retrace into this turned into support. So I would imagine that if you were to get back into this level here, this would act as support as well. And you also have the 200-day moving average right there too. So that's kind of where I'm looking to target this trade. Also too, you have really no structure here. Like this is a 4-hour chart. You have lots of like this big candle here ready to get filled. There's really nothing beneath that. And I think that we can get there rather quickly. So that's what I'm looking for. Is I'm looking for a retracement of some sort into this level of resistance. And then I'll go ahead and just take it short.
Yeah, like this is an intervention. This is basically an intervention, but not from the Bank of Japan, from Scott Bessent, from the US Treasury. Like what the BOJ and the MOF wanted to do for USD JPY was just done for the bond market by the US. A big unexpected move. Yes, they may have not came in the market and did an actual intervention, but they signaled that they will do it in the future. So just because of that, because of the announcement, you get an immediate repricing. And the actual event, when they start doing it, will be a non-event because the market will already price in the whole thing.
I wonder how this plays out too. Japan, right? They are, I think, our biggest customer when it comes to US bonds. Like they're the biggest majority holder. So if they have extra liquidity there to go ahead and buy back those bonds, they could essentially, Marco, the Treasury could buy those bonds off of Japan, and Japan can reallocate those proceeds and put that into Japanese bonds that can prop up the yen. So I'm curious to see how that plays out. But for going to 2 to 4, that's you're doubling. But I wonder, like, who are they buying from? Are they buying from portfolio managers that have money tied up in long duration bonds? And if you buy from them, well, at that point, they can reallocate that money into hyperscalers or other equity asset classes. Or is the other person that you're buying it from Japan? Or in that case, they can take that cash and then reallocate that into buying, Japanese bonds, and that'll help the yen. So I don't know. I think this is kind of a scenario where 2 could be true, and it could actually be kind of indirectly helping Japan a little bit.
Absolutely.
So
and it does show some credibility, I would say, that the US Treasury and Scott Bessent is not just some clown that's putting out notes for reporters, that he actually has some power to do things. Because we know he has been talking about lower bond yields, lower inflation, lower energy prices. He even mentioned the Strait of Hormuz opening. Nothing happened. So he said a lot, delivered on nothing. First time now that he may actually deliver and lower the bond yield. Well, he has been successful for today. So this whole thing gives some more credibility to Scott Bessent and the US Treasury, which could mean UJ goes down even more. Because the main thing why the speculators were pushing UJ up, they didn't believe the MOF, the BOJ, or the US. Like the credibility was not there. And the credibility is starting to creep back in, that those guys will actually do something and stick to some sort of a level, defend some sort of a level. So I think just the psychological impact could be enough to push UJ a bit lower, especially as we approach the 160 mark. Take a look at the chart. We almost hit 160, and 160 is the no-fly zone. So is it coincidental that Scott Bessent and the US Treasury came out with the news today? Probably not. Probably a bit correlated, and he was probably on the phone with Japan and this week and trying to see what can we do, what kind of financial engineering can we do to help the yen, avoid Japan selling a bunch of US Treasuries, because that would be super bad for the US, and lowering the bond yields.
I love how you said that, financial engineering. And what I like about this, and why it only increases my conviction for dollar short but dollar bearishness goes, is because you're not printing money, you're not doing quantitative easing, right? So it's not like they're printing money
Yep.
from the Fed and using that extra money to go ahead and buy back these bonds. They're just issuing more treasury notes, 2-year notes, and then using that proceed to go ahead and buy back these bonds. So I like the situation. I think that's why the market is actually taking this, and yields are lower instead of understanding and filtering through that and saying, hey, this could be an inflate. Because if this was quantitative easing being done to go ahead and satisfy this buyback, then I think the market would sniffle that, and then you would still see yields kind of sticky up there. So I like that a lot for the dollar short story.
Yeah, and you know what's funny? So when the news happened, I put the text into Google Gemini, and I got a completely opposite response. So essentially, Gemini said they're going to increase the supply. It's actually, yields will actually go up. The dollar will go up as well. Stocks will go down. So just goes to show you need to like double check AI, because a lot of the time it can be wrong, and you get like the confirmation bias where it wants to agree with you. I think it's called the confirmation bias. I don't know, but like AI always wants to agree with you. Whatever you say, it always wants to be positive, so that you kind of remain with that company because they're good to you, let's say. So you just need to be careful with that, because you can actually lose a lot of money if you put breaking news into AI and then it spits out the completely wrong thing. And then once I kind of talked with it and put in some more data, then it said, oh, crap, it's actually bearish bond yields, bearish dollar, and bullish stocks.
So what I've done to help with that, because definitely AI is just gonna, try to glaze you up, right, and tell you what you want to hear. I don't know about Chat GPT, but with Anthropic Claude, you have like a setting there where you can give it like kind of set instructions, blanket instructions, and I use this a lot because I'm doing like comment.
Oh, you muted the mic.
Oh, can you hear me now?
Yeah, but it switched to the source. I think you unplugged the mic by mistake.
Should be good now. What do you think?
Yep.
Okay.
Yep. It's fine.
Yeah, I need it to be unbiased, and so on the settings for Anthropic and Claude, you can basically say, make sure that you are kind of being a little bit of a contrarian and kind of going against me a little bit. And if we align, then we align. If not, let me know, right? Because I with my other project that I'm working on too, I need to know certain things. I don't need the AI to start telling me here, and then I end up going on the wrong path. So that's kind of how I would help with that.
Absolutely. That's actually a good setting. So you can do it in the settings, or you do it through the chat feature.
You do it like on your My Profile. It'll give you.
Okay.
You'll see it very clearly, and
Yep.
then you can just type it in there.
Yeah, like Claude is definitely the best, the most efficient for trading and numbers in general.
This is Keiser says it right on the head. Oh, you're right. Peanut butter does have peanuts. Like, come on, bro.
Yeah. It's like that. So, what else are you seeing today? Anything else that's interesting? Bitcoin is breaking out.
Yeah.
Big move there. It's pretty strange.
It's responding well to lower yields. Here's my hesitation. I want to short Bitcoin, and I've said this on the stream that I want to short it when it gets to the 200-day moving average. For some reason, Marco, the input settings are the exact same. This is Bitcoin on the daily on Coinbase, and then this is Bitcoin on the daily with Oanda, and the price of the 200-day moving average where it sits is completely different. So this one's sitting at around 75K, and this one is sitting at this one's sitting at 69K, 70K. So I don't know why that is, and that's giving me a kind of signal like I don't want to short, because which 200-day am I supposed to be trading off of?
Let me see mine. Give me a sec. Let's take a look. Bitcoin.
Does anyone know if we can trade FTMO through TradingView? In the US, you can. So this is actually the account that's connected to TradingView right now. It's a FTMO, and so you just connect it to TradingView, and you can do as you please. But Marco, what are you seeing with that chart? Where's the 200-day for you?
It is really close to the current price. So the same as you have now. Yep. Okay. Same as you have now. So I guess that's the right one.
Yeah, I would imagine. Okay. Okay, let me look at the Edge Finder first and see if it's worth pursuing or not. No. Where is it at? Did it move up? Let's go crypto only. It's neutral, I imagine.
Still
Yeah,
neutral?
it's neutral. So yeah, so I wouldn't do it. I like the trade though. We'll see. Also, too, right? If you have a continuation of these yields falling and Bitcoin's actually receptive to it, then it could probably just break out higher. So that's why. But I'm pretty happy with how I'm allocated right now, and I actually really like the opportunity in FX a little bit more than Bitcoin too. Like the possibility of re-entering on dollar Swiss on a pullback would be really, really nice. So that's what I'm going to be paying most attention to be honest.
It makes a lot of sense. I mean, like, and this could actually continue. So it's not like a mean reversion event. It's not like a bluff. It should be a sustained thing that they keep on pumping demand into the bond market. So the effect could actually be like grinding in the background and pushing the dollar Swiss even lower. Do you have any specific targets on the DXY?
So with DXY, I think that we just start kind of grinding lower to these pre-war levels. If I'm being honest, 98 would probably be a round number that I'm looking at. But you had this level of support here, this daily 4-hour level support. You have the 200-day moving average that we broke below. So you have, me personally, I think that you're starting to really start to unwind this trade here, and you're probably getting to 98. And then if you want to just zoom out even more, you can probably look at 97, but that's kind of getting ahead of ourselves. But for me, I think the nearest target would probably be 98 on DXY.
98. I would say the same. And I think it's absolutely achievable. Like once the repricing happens from the Fed watch tool, and once it goes to a more fair probability, I think 98 is the first target and pretty easy to hit. I mean, if you zoom out, like the DXY is still in a big flat range, so it's not doing much. It's just probably gonna continue to move inside of that range, and go lower for now. So that's kind of what I'm seeing. Yeah. So as far as new catalysts, any upcoming catalysts, what do you think? What is gonna be important?
Maybe Jackson Hole.
Okay.
Is usually a turning point. That's what I'm looking for. That's not until next week, right? So we have some open room for that. Yeah, I'm just gonna try to see how pullbacks are received on DXY. Like if you get a pullback, also too, like I'm just gonna correlate the two charts together or compare them. So if you get a pullback into DXY at the 200-day moving average and it rejects it, then that would be sufficient enough for me to re-enter dollar Swiss short on my personal brokerage account. So that's pretty much what I'm looking at. And same thing goes for euro dollar to the long side. So yeah, that's pretty much it. To answer the guy's question here, the Sheck family, I picked FT. So I'm in the US. So there's two different entities. FTMO Global has C Trader, if I'm not mistaken, Marco, right? C Trader and platform.
Yep.
FTMO US only has MT5 and TradingView. So I chose TradingView. But if you're not in the US, you may not have TradingView as an option.
Yep. Which one do you like the most? I like C Trader.
What do you mean, like which platform between like MetaTrader and stuff, or?
Yeah. Yep. Like TradeLocker,
I like
C Trader.
Oh, I've been testing them all lately. I like C Trader a lot. I like TradeLocker. They're very easy. I like that they're web based. So that's really helpful. MT5 is just like a legacy platform, which I'm not going to be able to offer MT5 because they don't have a API connection, OAuth, or OAuth, whatever it's called. So I'm going to have to just stick with like C Trader, TradeLocker, Tradeovate, those ones, Rhythmic, NinjaTrader, all those.
Yep. I mean, MetaTrader is so freaking old and outdated, but then again, like on the phone, it's the fastest one and the most simple one. Like I've been using the Interactive Brokers app because I've switched brokers, or I've completely switched to Interactive Brokers. The app is a mess. Like the web app is a mess. The phone app is a mess. You can't get the data at a glance. You have to dig for it, like the entry, the entry time, the profit in euros. So it's just compared to MetaTrader is still like the best for simplicity, but CTrader is pretty good. TradeLocker, nice as well.
I use MetaTrader for my phone. So on my actual brokerage account, I use MetaTrader. I don't even execute like on the computer, dude. Like I just do it on my phone most of the time.
Yep.
So yeah, the mobile platform is really nice.
Yeah, on MacBook you can't even get MetaTrader. So like you have to stick to an iPhone. So for me, I can only execute on the phone, while CTrader is on everything. So it makes a lot of sense. And it has a position size calculator built in, which is the best thing. So for MetaTrader, I have to use like a completely separate position size calculator, but for CTrader, it's built in. So you just type in the amount you want to lose or win, or basically, and you get all of the levels, the lot size calculation, everything is automatic. It's a huge time saver.
With MetaTrader on the mobile, like when it comes to like the lot calculation and all that type, I just type in 100 every single time. So like buy 100 lots, sell 100 lots, and I just kind of YOLO it like that, you know.
Well, that's a strategy as well. You know, it depends what you want to do. If you want to calculate the lot size, it's fine. But if you want to do 100 every time, it's fine as well, you know.
Just kidding, everyone. Just kidding. Do not do that.
What do you use? You use like a online calculator?
No, I kind of know the mental math, honestly.
Oh, okay.
Like,
cool.
Yeah.
Cool.
Yeah.
Cool.
It's pretty simple. Like for example, euro dollar, each pip is $10, depending on how you're going. Like if you're going from like 1.16600 to 1.1500, that, you know, it's 100 pips. So if you're right here, that's 50 pips.
Mm-hmm.
So if you do one lot, that's $500 if you put it right here. So I kind of just have the mental math already.
Oh, okay. Well, that's the fastest. So that's great.
Egg USD.
The Egg USD, that's some sort of an inside joke, right? I forgot about it.
Yeah, I used to Forex James. I used to type that into the chat a lot with them, and I used to troll him a little bit. Haven't done that in a while.
I can join you for the next one. Next week on Monday, shall we join the Forex James stream and try and put in some comments?
We should all do it as a collective. If we can all remember, we'll show up tomorrow or on Monday, and we'll definitely we'll ask James for his analysis on eggs.
Absolutely. That sounds fun. But do we have any comments that we can look at?
Let's see. I think we have 2 minutes, Marco, too. I think let me be conscious here of the schedule.
I think we're on until noon, so we still should have 18 minutes, but I'm not exactly sure. So the schedule is a bit tough to read. Maybe
on the website here, maybe James, producer James, you could help me out here. I see 11 to 11:40. No, you're right though. There's a 15-minute gap. So I think we're right. I think we're on to 12.
Yep. I think at 12, Chris and Nick probably come in and they do like a joint segment.
Cool. All right, let's see. Come on, guys. Let's get some comments here flowing. If you guys have any charts that you guys want us to go over, feel free to drop that. One thing I will say, I'm going to do this here too. There's a lot of market moving stuff going on right here. So I'm going to type this into the chats. This is the Telegram channel. If you're not in there already, it is completely free for you to join. And so we provide you updates on what's going on in the market. This morning, I did one on what's going on with the dollar and the bond market, all that good stuff. With FOMC meeting minutes on the horizon. If there's anything that you need to know about that's market moving and has implications for other assets, I go ahead and do it. I'll probably do another markup here shortly thereafter if there's something worth knowing. But you can stay up to date all the time by just joining the Telegram channel. It's completely free.
You know what I'm interested in? I want to get your list of the major currency pairs. So from strongest to weakest.
Okay. Ooh, strongest. Let's go. I would say, I mean, honestly, I think right now what you're seeing is everything is up against the dollar just because of dollar weakness, not necessarily because they're strong. So I think that's what you're seeing. You're probably seeing a rotation into the Swiss franc because of that overcrowded positioning that we were talking about, and it's the next best thing. But let's do that. Let's go top down. And let's kind of filter out what is the hottest and what's the weakest. So let's go to currency strength here today. We can see that Swiss franc is the biggest winner. Then you have in the middle, you have Kiwi, Aussie, Pound, Euro.
Yep.
Let me look at let's start with Equal Surprise Index first and see like on a near term relative basis who's been outperforming and who's not. The Swiss franc is actually not doing too good. It's at 40, but then the US is doing really, really bad. Canada's pretty strong. I can give them that. Aussie's better than the Kiwi, I would say. Pound, where's Euro on this list? Euro's not doing too good either, like you mentioned earlier.
Yeah, although the thing that I'm betting on, like the energy crisis, it doesn't really come in until October, November. So you're probably not going to see an effect. Well, maybe you're gonna see some front running where people buy or hedge some of their energy exposure, like countries even. So it could even start hurting the euro in September. We'll see. But going into
That's
the winter,
true.
euro is not my pick. I would prefer to maybe even sell it.
And as you say that, Marco, like my where my mind goes is like, okay, if it's not the euro, then where do you go? Then look at this. The economic strength index, which is like the real yield calculator here, has the Swiss franc above the US. So I think you're seeing a real pivot into the next best thing, which is the Swiss franc. And so if you can kind of try to stay away from that Eurozone kind of vulnerability that they have going into the winter, especially if you have oil prices higher, then I continue to see dollar Swiss as my top pick. So I'm very, very happy with that choice. And I'm probably going to just continue, kind of prioritizing that one, honestly, out of all the other ones.
Yeah, and what's also important to mention, like the yen is no longer such a great funder currency. So especially if you expect the Bank of Japan to do back-to-back rate hikes, selling the yen and buying the dollar may not be such a good proposition any longer. And the next one in line is probably the Swiss franc. The problem with the Swiss franc is that it just keeps on appreciating on a large scale. But if it does become a funder currency, it could catch a bit of bearish pressure, I would say. Because again, to execute the carry trade, you need to buy the dollar and you need to sell. You need to sell the Swiss franc, for example, as you needed before to sell the yen and buy the dollar. So that's something that is looming. If the Swiss franc replaces the yen as the funder currency, it could bring some bearish pressure there. Although we don't seem to be seeing that at all.
Yeah, what I would probably do, what I probably see happening is you have this, because markets are always shifting, right? So for me to say that the dollar is going to be bearish for 6 months, looking out 6 months, I don't think that's going to be the case. There's cycles, right? Cyclicals, all this stuff. You have midterms coming up, so you may have, I don't know, whatever, right? Like, for example, we came into this year with how many rate cuts are we getting? We were right over here on DXY, right? Towards like the bottom end of the range, coincidentally, right? And then you have the war started, so then you get to the top end of the range, and then you get here, and then things start to not look too good for the US, and then you start trading lower. So with currencies, it's super, 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 super normal for them to be trading range bound. And so for me, what I would see happening is I'm trading dollar Swiss from up here, trying to catch it here. And as you get to the lower end of the range, I would probably start to look to start accumulating dollar Swiss to the long side again. Basically just kind of trading it from zone to zone. I like that idea too. If you have Bank of Japan or Japan raising their interest rates, the carry trade dynamic doesn't look too good anymore. You know what does look good? Dollar Swiss. So that one, I could see that if you were to see dollar Swiss kind of get to these lower levels here, maybe the dollar yen carry trade doesn't look too hot. And if you're asking yourself where do you want to go with carry trade moving forward, you probably choose dollar Swiss. So that's kind of what I'm looking for there. Yeah, that's pretty much it.
That makes sense. Again, the big problem with that is the Swiss franc has just been going up and up and up in like a span of, on the monthly chart, let's say.
Yeah, look at that.
Yeah, and if you look at like Euro Swiss, Swiss yen, Swiss has been a pretty monster currency, which doesn't make a lot of sense because it has a super low yield. But I guess it's preferable because of its, I don't know, safe haven status. I don't know. Because Switzerland is supposed to be super safe. So
super safe, privacy laws. A lot of their
Yep.
reserves are backed by gold, which is like super
Mhm.
secure. So like sometimes you don't want to yield, right? Like and especially in times like this where you have so much uncertainty, maybe the trade-off is less yield but more safety, and I think a lot of people are willing to make that trade. So
Mhm.
that's why I see dollar Swiss kind of moving lower. I love it.
What's your take on NZD? Do you think it's bullish, bearish, flat?
NZD, when I look at it from a weekly chart, I don't like it. It's very choppy.
Mm-hmm.
Unless you're buying it, like I say this now, but unless you're buying it here lower levels or selling it up here, I think that, and if you look like the path to get there is like very, very choppy. Like you have big wicks on all of these candles here. When it comes to Kiwi dollar right now, would I trade it at this current level? No, because if I just remove this and I remove this and I extend this, you're pretty much near the middle of the zone. So I kind of don't like that. You are above the 200-day, so that's kind of a good tell. But if you just look at the past, even though we are above the 200-day moving average, you do have some wobbliness within this. So with
Mm-hmm.
Kiwi dollar, I don't know, man. I prefer, like when it comes to Forex, I'm kind of like making this development where, not development, but I'm kind of drifting towards like I just want to trade either euro dollar. Like that's kind of my biggest pick. Because if I want to trade Forex, it's not because I'm trading something specific. I'm trading mostly the dollar, and to do that
Okay.
objective, I want to trade like euro because it makes up the majority of the DXY basket. So I like that
Mm-hmm.
one.
Mm-hmm. Mm-hmm.
And then if you have something super polarizing, like for example yen intervention or dollar Swiss right now, then that makes sense. But other than that, I kind of like drift towards euro.
Yeah, it makes sense. Makes sense. And your long-term view on the yen? Do you think the bullish pressure on the yen continues? You think it's a fade? Like
Nah,
I
nah.
mentioned. So I mentioned last 20, 30 years. If you look at the times when the Bank of Japan and the US did a joint effort, joint intervention to switch the direction of UJ, usually you got the initial intervention and then it went all the way back up, took out the high, and then the real trend lower happened. So the past, I mean, you just have two examples, but the past is telling us that we actually fully retrace this whole intervention candle, and then we start the big move lower. Personally, I think we actually do continue lower on UJ from here, and that the yen continues to gain value in the future. But what's your take?
I think it's a fade, man. I don't
Okay,
know.
okay.
I don't know. Like for me, I'm not liking the slow drift lower. Like it wants to go lower, but it's hesitating. It's like being very stubborn. And for me, like if something's truly weak, I want to see it be very weak. When I say weak, I'm referring to dollar yen. Um, so for me, I'm like, I don't know. I kind of like the idea of building a position if we find yourself at 150, 153, 152. Yes, Japan's trying to fix their problem, but they can only
Mhm.
hike so much so fast. So unless they go from 1% to 3% in the matter of one meeting, then I could see the structural picture with dollar yen shifting. But for a change like that to happen, for them to go from 1 to 3%, it takes a lot of time. And so what do you do in between that time? For me, I just kind of would rather buy dollar yen on any significant discounts. And
Mhm.
then once you
Mhm.
get to the point to where you're towards that finish line for Japan, where you're getting closer to 3% interest rates, then like the carry trade dynamic starts to fiddle out, and then you probably see a kind of like a flat range bound chart. But I mean, there's a lot of things that they're trying to achieve, like the domestic buying, the forced demand into the pension funds and stuff like that. I don't know if have there been any dates to that yet, like when they
It's
plan
supposed to
to.
be grinding in the background, like the GPIFs, the Japanese pension funds selling foreign, buying domestic. It's supposed to be happening in the background, but the effect so far has been minimal. You know, I saw some articles that they have started to do it and that they hired some domestic fund managers to help them, but just I'm not seeing the effect on that on UJ. I'm just seeing UJ drop massively from the intervention, grind back up higher to 160, drop again today because of the US Treasury news. So it's mostly just shocks pushing it lower, and then natural flows pushing it up. So
Exactly.
That's why
Yeah.
it's a bit tough. It's a bit tough to know, because if Scott Bessent is serious, if like the US Treasury is serious, they can do a lot of things to push this chart lower. They have a bunch of tools, a bunch of liquidity, a bunch of capital at their disposal, and if it's a joint effort with the BOJ, it can go down, absolutely. So it all depends on how serious the BOJ, MOF, and the US Treasury actually is.
Exactly. Marco, let me ask you one question here. And please tell me as quickly as you possibly can, with
Okay.
the most precision that you can. Gold,
Okay.
buy or sell right now?
Oof. So, that's the $1 million question.
That's the $1 million
Everyone
question.
wants to know. I know immediately when I start the stream, because I'm the one usually starting the stream. Free comments load. Gold. What is gold gonna do? So for all of the gold traders, you got the breakout. Finally, we can talk about it because it's finally doing something. And I would say it's a buy on pullbacks. So I was looking for 4,300 to get in. 4,200 would have been even better. That didn't happen. We went up. So I would say a break and retest of the 200 would be nice. You know.
Okay.
I think that's the play. You're getting fundamentals are very bullish for gold at the moment. So I'm betting on a dovish Fed. You're getting the bond yields going down, which make gold more attractive. Edgefinder is bullish on gold, so it makes a lot of sense. And
what do you think of this trade setup right here, Marco?
I would say it's not aggressive enough. You know,
Oh,
when
it's
I'm
not
bullish on
aggressive
gold,
enough.
when I'm bullish on gold, I wanna just go in, and stop loss. I wanna know when I'm wrong, so the stop loss is gonna be absolutely minimal. And yeah, this is probably not risky enough. You know.
So maybe I should go like to 5,000. You think?
Absolutely, all-time highs. Yeah, I think that's a good bet.
Snap. That's unfortunately what I see often. Is this setup right here, this risk to reward ratio, and maybe one day you'll get it right, but don't know, man. I got this idea from Nick. Nick actually made a funny video, and his risk to reward was like this. It's crazy, man. It's crazy what's out there.
Was it his latest one, or
it was some time back? I feel like.
Okay.
And by the way, guys, that is a joke. Please do not take that setup, because I know someone out there is like eagerly wanting to trade gold, and they probably saw that as a legit signal. That is not a signal. That is not financial advice. That is not what you want to do with gold.
Yeah, hopefully by the time you get to us, you have filtered through all of the scammers and the immense reward to risk traders with like 50 or 100 to 1. But that's not the realistic approach. That doesn't work. And yes, you may get one winner. And you know what, actually, what is the latest thing in the world of scamming in trading? Like the latest strategy. So it used to be no track record at all. The new scam is you put out signals, but you don't give out the quantity on each trade. So you don't give out the volume. And you don't say anything like I'm risking between 0.5 to 1%. So essentially, if you don't have an edge, you will be break even, right? So after 100 trades, if you count all of them up, you will be break even. But you can then say post trade, I've risked 2%, 3% on the winners, but only 1% on the losses. And that's basically the scam. And it's tough. It's tough to look into, because not a lot of people will actually download all of these screenshots from the testimonials and put them into Claude or Gemini and see that there's no edge behind the strategy. So yeah, be careful out there. And if anyone has like a video showing their profit and all of these screenshots from the trade journals, it's not going to be a broker statement, of course. Just take the screenshots, put them into Claude, and ask Claude, what do you think about this strategy? Is there an edge behind it? Claude is going to be pretty fast in calculating, is there an edge, or is it just a play on the position size? So yeah, that's the latest in the scam world.
Yeah, because you could easily have 10 trades, and 9 of them are just horrendous losers. But then after the fact, you could say, yeah, well, those 9, I risked like 0.1%. And on the winner, I risked 3%. So I'm up. Like, it's like, come on, man.
Yeah, there's one guy, I'm not going to mention the name, but basically he had I think 30 losses in a month and then 1 trade on silver, which made back all of the losses and like 2x the account in a month. But like it's obvious that he put on fake massive size for the silver position. So yeah, it's tough. You really have to be on top of your game to spot who is real, who's fake in the space, and they're getting smarter and smarter.
You would think though, Marco, that it should be easy to understand who's like faking it and who's not. Like trading is definitely difficult, and if you were to try to pursue a career in another equally as difficult or even more difficult kind of venture, you would apply different logic. Like if you were to, I don't know, be a surgeon or whatever, and you're an aspiring surgeon and you meet a surgeon and the surgeon tells you, buy my course and in 15 days you're going to be performing brain surgery. You're going to be like, dude, what? Like, I am not trying to get educated from you. But you can not apply that logic on something like this where they tell you, well, in 15 days you're going to be killing it out of the park. It's like, why not apply that same logic, But
Exactly.
It's a tough battle, man.
Absolutely. Yep. And like the best way to verify is a broker login, MyFX book, broker statements, DarwinX track record. So a couple of websites or a couple of statements are good for actually verifying who is real and who is fake. I remember when Nick did a series online, so he gave away $1,000 for any trader that steps up and puts out his track record. And like I think he waited for a couple of weeks to find free traders because it was so hard to find someone with an actual real verifiable track record. So yeah, that was pretty fun.
Well, dang, Nick, if you're listening, man, I'll send you my statement right now. If you want to wire that $1,000, I will get it to you rather quick, my friend. You just say it, and you already have the wire instructions, so it should be pretty easy for you. But I'm gonna go ahead and transition it over to Nick and Chris. I'm very interested to see what they think about the bond market stuff and what's going on with FOMC meeting minutes. So, thank you, Marco, for that lovely conversation. We'll talk tomorrow, and have a good one, guys.
Thank you, Alan, and I'm looking forward to seeing you tomorrow.
All right, man. Take it easy.
Goodbye.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Unmute, Nick.
Can you hear me now?
Yes, sir.
Okay. Hey, Chris, how's it going, man?
Good. What a Wednesday, huh?
Oh my gosh. What in the world? That was such a, I was looking at my economic calendar this morning because I was like, right at 8:30, you have this ginormous sell-off in dollar yen and all these charts go crazy. Gold up, 1.4% here today, and all on some bond market shenanigans. Chris, what are your thoughts on all this? You have the long end absolutely tanking on the yield side, of course, ripping on the bond side. TLT is up today. I was just looking at this thing, not necessarily to buy it, but I'm looking for some sustained rally here to the upside. I may actually take a stab at long bonds, which is kind of a crazy, weird strategy that I haven't done in a while. But what's your take on all this?
I think what this is the Treasury, mostly Scott Bessent and company, trying to make the Fed's job a little bit easier by sacrificing the dollar to get the bond market to obey. They're trying to get the yields to obey. What makes me nervous is the correlation we saw back in 2025 when yields were down, bonds were down, dollars down, gold's down, equity's down. Like, I don't think we're at that point yet, but like this is clearly like an aggressive pivot where we just doubled the liquidity from the US side. And so, I mean, that's not a bad thing. And I think this is a bit of a tailwind for equities. But what it shows me is that we are trying to manipulate our way through like what the market needs to see with relief is it needs to see the bond yields go down. It wants to take off some of that pressure of the Fed by trying to be hawkish and act hawkish and actually raise rates. And so if the yield market can cooperate and Besson can help facilitate that, then it makes the Fed job a little bit easier just to sit tight, not have to do anything, just kind of ride out some of this sticky inflation and see if it improves. But dude, it just feels like pure manipulation to me, and we're not necessarily back at all-time highs. It's not like we had a moonshot bullish day today. Like, we still have minutes. I think that maybe this just offsets. We have this kind of bullish pop. We have hawkish minutes that are coming out, and we still have Trump on the calendar at 2:30. We'll see how the day closes. We have OPEX on Friday. We have NVIDIA, Jackson Hole. Like, I keep going back to this, dude, but this is such a wild window of volatility with low volume and lower liquidity that any type of move can happen. And like, just be prepared for some whipsaw action here in the next couple of weeks.
Yeah, I feel like, the way I think about this is a fascinating, ginormous bond trade going on with Scott Bessent.
Yep.
And co. Like,
Yep.
They've got something going on here that's really interesting. And I was just listening. I've been citing all week this video that I listened to. Do you know who Patrick Boyle is? Have you seen some of his videos on YouTube?
Let me take a look at him.
I'm sure you have.
B-O-Y-L-E?
Boyle, yes. He put out a video talking about the Japanese yen situation. I know you're well aware of like how all that's going on, and it's a never ending, kind of interesting story in markets right now. But he put out this whole thing kind of breaking down like the US Treasury's involvement in that situation, that recent development. Fascinating video. But he kind of pointed out that there's this whole thing going on right now where it's like borrowing at the short end and buying on the long end. And sure enough, here is a very pinpoint targeted shot at the long end to kind of get long end bonds to rally here. Kind of an interesting concept, because how do you pay for this? Let's think about this. They don't have any money, right? They're 40 trillion in debt. How do they pay for this support of the long end on the bond market side of things? Well, they print more money. So it's so interesting. It's like, how are they supporting this situation in the bond market? Well, they print more money to support their issues that they're having about printing too much money. It is a very bizarre, distorted thing. The bond market is a deep rabbit hole that goes way deeper than you think.
Yeah, and this is also we've talked about the the paradigm. Well, I'm trying to think of the paradigm. Like, paradigm C is to grow. Like, paradigm B was cut and austerity. Paradigm C is grow, which we've been told is that's what we're doing. We pivoted into like growth.
Right.
We've already pivoted to paradigm D, which is print. Like, that's kind of what this is. So that does mean that although this might be a shorter term relief, this ultimately does mean that we're accelerating our path towards the fourth turning, which is not good. Like, that secular bear market that everyone's talking about, rational bears are talking about, trying to line up the timings for, it just means that when and if it does happen, it's going to be fantastically bearish and it's going to be terrible for everybody. But I also wonder if there is at least some runway where the U.S. continues to do its thing, be stable, resilient in some way, shape, or form, drive this reflation trade back into all-time highs, and the world actually performs pretty well as well, just because there's a stable world, there's a stable world trade, a U.S. resiliency, and it could also mean just like countries are going to start repatriating away from U.S. treasuries. And I mean, we'll see. It's like, dude, we're making this reaction today. It's like, today could be noise. It's a whipsaw in August. Is this really like a true trend change in a day's pivot? Like, this pop up to 77.40 did absolutely nothing other than come back and fill the gap from this backslide the last couple of days. So I'm not convinced that this is like, oh my gosh, this is upside risk 101. Like, it's not yet. Like, the price would have to be surging back above like 77.80, 7,800 for me to be like, well, I guess that's how we're going to get to 7,800 or 8,000 is just like this pure manipulation trade.
Yeah, well, and that's the thing. I think what this does, if you're just kind of being blunt with it, it's like it's saying those treasury problems, all the debt, the national debt problems, those are problems, but they're not problems right now. That's like what it, because you just have this, fat finger in the buy button moment. It's like, okay, well, you can't really, in the very short term, there's a huge buyer, a committed buyer. And Chris, this is my thought on it. I think that this is a continuation of the Japanese yen support program that's going on. This is not just about U.S. Treasuries. It is ultimately for the Treasury, but it's, I think personally, adding some liquidity into bid on Treasuries in order for Japan to sell some, have a buyer that can offload, take their offloading Treasuries, the Fed or the Treasury, which is, just another is confusing, but they're buying bonds back from Japan. That's the way I think of this, in order for Japan to raise cash and to buy the yen, support the yen. So we see dollar yen here moving lower today, which would kind of suggest that's what's going on here. You've got liquidity added to the picture in order for Japan to support the yen.
Yes, but if you look at ZB right now, does this get you bullish at all?
No, it's a tough looking chart.
It's a daily chart. And I'm like, okay, so I just marked this low from 2023 and we're still making lower highs and lower lows. 1 day pop. We haven't done anything to close above the last couple of weeks of highs. So, I mean, there's no convincing me yet that this is like the tide has shifted. This is time to get long bonds. Honestly, the one thing I'm happy with, and I hit some fresh all-time highs in the portfolio today, is I'm happy to see gold as a beneficiary of this. Like at least, dollars down, gold is up. That's encouraging. All my trades that I put in to kind of accumulate my gold is they're looking better and better. The out of my percentages are increasing. I'm not going to touch the gold positions because they're still way down here out of the money. And also we got an interesting pop on Bitcoin today.
I saw that.
Yeah, it popped up nearly to 70K. So, if the equities market looked like this today, and it's like, oh my gosh, what an outlier type move. It did a, 2-3x move today. It didn't. It's still well within the expected move on the day. Here's my range. It's like, if we're still trading within 77.50 to 76.70, this is just another day of trading.
Yeah.
So all this like manipulation and what ifs, it's like, dude, we have no follow through on this yet. And
interestingly, the 2-year yield is actually higher today. So you have, in contrast to the steepening that we've had recently, which is obviously short end bond yields moving lower while higher end moving higher, we've seen kind of the opposite. So we're seeing the 30-year come down while the 2-year yield is actually moving up today. So, so anyways, I think it's a very interesting story. I think that one thing that is, I listened to somebody, another shout out to another channel, Bravos Research. I'm sure many people have heard of them. They've also got some really great videos. Talked about the Japanese yen, historically speaking, being the canary in the coal mine. So what you're talking about here, Chris, where, okay, this is like, is this the beginning of the end type of thing? It doesn't mean it has to happen right now.
Correct.
But the Japanese yen, before historical like major corrections, so often like strengthens, and then it busts the market at some point. In 2008, the yen strengthened for some time before, and then ultimately, let's see, here's 2007 into 2008. So July 2007, you started getting yen strength. The market kind of cracked at a point, and the yen kept strengthening. And this is the big reason for this is for a very long time, decades, in fact, the Bank of Japan has been the world's piggy bank for borrowing. It is. Is it almost that simple? Is it really just as simple as saying the big bank has tightened things up and that could be kind of the beginning of the end of the party? And I think it's a fair conclusion. We've had nothing but yen weakness for years upon years. I don't know when it cracks, but if it's starting to crack the other direction, that would be one of the more convincing things. I would say, yeah, that could topple the market.
Well, if we take a look, you can zoom in on your chart there with the daily. I mean, I'm looking at like 155. If we crack 155 convincingly and continue to put in like a bear flag to the downside, I mean, the dollar yen could unravel to 140 very quickly. That also might be a double top that unfolds and just measure that move. I'll get the measurement here. So I'm just talking some technicals here. But if we have this, first and foremost is we get back down to this low and we have this little head and shoulders. If this thing cracks below, makes a lower high or makes a bear flag, dude, this unravels to 140. What scares me the most is it's not going to stop at 140. It's going to go all the way back down to where this whole thing started back in 2022, which is 120. That's what I'm worried about. There is no way, in my opinion, that the equities market is going to be at all-time highs if the yen is going to strengthen by 5,000 pips.
Yeah. Well, and it just goes to show people have blown off the reverse carry trade many, many, many times. Like they've said, oh, it's nothing, you know, that stuff going on in Japan. And look, I mean, to their credit, it hasn't been enough for a long time. But to also point out, the yen hasn't really strengthened the way it has historically. So I feel like if you're somebody watching equities, keep an eye on the yen, because it's effectively a massive global rate hike. If you have Japanese yen strengthening dramatically, it's probably in combination with a bunch of monetary policy expected to tighten further. So, you know, this is an interesting dynamic, but I think it is a creative way that they're trying to keep the yen from falling apart here. The question is, does it start to actually, like you said, start to break ranks and actually trend lower on dollar yen for a while? That would be an interesting shakeup that we have not seen in many, many months.
Well, the head fake was 2024 when that was a true. I mean, there was a 2,000 pip unraveling there, and then it came right back up. So it's like, you know, I mean, think about that. We had a 2,000 pip unraveling in the dollar yen, and yet we hit a V bottom and we went right back up to all-time high. So like, if it's contained, I mean, Nick, we could possibly pull back to 140. I mean, that's still an ugly, ugly move on the dollar yen. But if we bounce at 140 and go right back up to 160 again, equities market puts in a low. I mean, the Nikkei is still looking postured solid. I mean, we've come off of a nice little pullback on the Nikkei. I think it had like an 18% correction or so. Nikkei pulled back about 18.2%. Now it's moving pretty well. I mean, I think on this trend line break, if this is like, you know, buy the dip on the Nikkei, trying to go to all-time highs. Take a look at international markets. You know, FTSE just off all-time highs. DAX just off all-time highs. I look at VT quite a bit because that's where I'm putting most of my global stock portfolio. And it's, you know, it's up near the highs. It's like I'm selling a lot of options. I mean, I was pretty bullish to like the first half, second half. You know, really, I'm thinking of like the bulls can kind of survive this through like 2027. Very skeptical going into like 2028, 2029. But I wonder if we just move that timeline closer, like the fourth turning, the secular bear market. Because look, man, if we can't grow our way into prosperity, we're trying to print our way into prosperity. We're trying to print our way into like longevity. Right? Does that make sense? Like, I don't think it's not real, dude. Like $40 trillion in debt, blowing up the balance sheets. I just think that at some point with like yields at basically 20-year highs, a Fed that is stuck between like a dominant fiscal policy regime that they need to raise rates to match the 2-year yield, which they're 60 to 70 basis points behind. But obviously when the market starts to see that the Fed is going to hike, a one and done hike, I don't know if it does the trick. Usually it's going to have to be like a 2, 3, 4 hike cycle that all of a sudden, how would you not have an equity sell-off? How would you not have like the market freaks out tantrums for a 10, 15, 20% correction to then see things like calm down and bottom out? It's like, we talked about this a lot this year. It feels like something has to break in order to see like a top or bottom really form. So today is not a break. Like today is like an interesting reveal into like, this is what the Treasury is trying to do. This is what the bond market's trying to show us. But I think the bond markets are still very stubborn. I don't think a one day message from Bessent is enough to like get the bond market to really bow down and say like, okay, we put enough pressure on the Fed. We'll go ahead and take a step back and drop by 50 to 100 basis points. Like yields are not going to budge that much.
So you lean more in the direction of it's going to be sort of a Bank of Japan, like a yen-intervention type chart where it's like it blurbs things lower and then, you know, they kind of ignore it and keep going with the pre-existing trend. Is that what you're thinking?
I mean, it's going to take a lot for me to see how we change the tone and the mood of the bond market. The yields have just been pressing higher through thick and thin. We've cut rates 200 basis points essentially. And the markets have not gone down in yields. And so
they're higher.
The trend of like the Fed cuts and the bond yields follow, it hasn't been happening for 5 years. So I don't believe it. It doesn't mean that I'm bearish, because it's like, I get it. The way the market keeps pace with a weakening dollar is having an upside equities market, and the capitulation, the upside is still very possible, but that last inning or so is what is nice to hang on to, nice to protect, but it does make me want to keep like plenty of dry powder on the sidelines, enjoy the kind of hand picking that I'm doing, and just letting some of the time premiums pay me without getting like into the trenches of, I just think we have a lot of whipsaw and a lot of noise that's potential the next couple of months. We've seen nothing but churn for many, many months this year. This great rotation trade. Did you see Moderna today? It's up 140%, dude.
Really?
Yeah, it's like there was a cancer trial drug that went pretty well, and it's up 130% like overnight. And earnings was like 2 weeks ago.
Yeah, XLV itself
Yep.
is up 3%. My goodness.
So
I don't even remember is it mRNA? Yeah,
that's
mRNA.
correct. Yeah.
Yeah, I don't remember. Last time I looked at this thing closely was probably back in the COVID days when everybody was looking at it.
Exactly. But on a positive note, like, I mean, XLV is up, which I have XLV. Eli Lilly is up to fresh highs. Like, I mean, I looked at the fundamentals. I'm like, I would have never picked Moderna as even a stock. Like, it sucks. It's like 11 times sales. It was a COVID vaccine. I'm like, no chance I'm going to buy that thing. And it's up 140% right now.
Yeah.
Constant FOMO, dude. But it's, it's fine. It's just tough. I talked about this. I sent you that message yesterday on Discord. I'm like, I just closed out for a 500% winner yesterday. Right.
Yeah.
So I looked at SanDisk, which for the year is up, 300 or 400% or something like that. Where it had I think its highest for the performance year was like 700+%. Like, that's great on the one time you can pick the needle in the haystack to perform like that. Right. On a company that makes nothing more than an SD card that, like, nobody knew what SanDisk was as far as AI, but now they're the greatest stock in the world. It's just crazy. It's like, dude, the indexes, we'll see if there's still churn, if the indexes maintain posture, if there's rotation happens underneath the surface and the market can hang on to these highs. I don't really know what to make of this in a one day tape. Like, 1 day from the bond market, 1 day in yields, 1 day with the treasury. I just think it's best in trying to help the Fed, like, be able to just stand firm without having to do anything action wise. They don't want to see the Fed have to hike rates. So and now it's like a 3-prong approach. It used to be like, well, it's fiscal policy, monetary policy. Well, now you've got the treasury, and you got the government, and you got the Fed. And it's like, dude, if all that liquidity is working together, it's hard to still fight the markets. It still probably wants to go up, but it's the longer we go and the later innings that we get to, it's like, when this unravels, it's like, this is where the bears sound so rational, where it's like, it can be horrendous when it's all said and done, because the leverage and manipulation that got us here can all go away, and there's no buyer there.
Yeah. Well, and the other thing, Chris, is, I mean, the maybe the lukewarm bear in the room is someone like myself, maybe, who's just more interested in gold. Like, out of all of this, to your point, all paths lead to gold on this. Now, again, not financial advice. Trading's high risk. Please don't be an idiot. And me saying that, I'm not telling you what to do. But in my opinion, the easiest market to be long right now in my own trading is gold, because out of this scenario, I mean, I already had been thinking weaker dollar. I'm a macro nerd, and the macro has been really, really soft for the dollar here recently. Economic growth metrics have been coming in softer. Inflation was mostly tame. The 2-year yield had been trending down. The jobs market had multiple prints that were weaker than expected. As a macro guy, I'm like, dollar index looks weak. Right. Then you throw in this catalyst, this story here that is kind of like, hey, is the treasury like freaking out up there? Is that what's going on? Like, they don't like where yields are. Somebody said Scott Besson is watching the print, which is no question he is doing that. He is a bond trader through and through. Right. He looked at what everybody was saying, just like you and I were seeing it. Every single macro person you saw on the internet was saying bonds highest yield since 2007. You can absolutely sleep soundly knowing that Scott Besant saw those same things and said, ooh, yeah, that could spike dramatically. Let's get something out there. Let's get something in the water that's going to kind of cool off the bond market in the meantime. And will it stick? I mean, we'll have to see. But for me, one of the most bullish scenarios is when you have the dollar trending down while yields are trending up. That circumstance is just super, super bullish gold. Here's why. If yields are moving higher, but at the same time, the dollar's weak. That's telling you that people don't trust the U.S. economic story. They're concerned about what's going on there, and simultaneously, yields can go up for good reasons, but they can also go up for concerned reasons. People saying, "Ooh, 40 trillion in debt. Yeah, no, thank you. We'll pass on that," because you can see it in the dollar, right? So they're selling dollar and also selling government bonds. That situation is like gold's perfect storm of bullishness, and so people losing faith in the treasury stuff simultaneously, weaker than expected stuff on the dollar, as we just got done discussing. So to me, all paths look good for gold right now. That can change. I'm going to keep an open mind, but I am looking to buy retracements. Chris, I'm not in it with any short-term active trades. Obviously, I've got, my long-term exposure here to gold, and I'll hold on tight to that right now, but I wouldn't mind some pullbacks if I got it. I'd probably be long in gold personally.
Yeah, I think we just cleared like 5 or 6 days of indecision on gold. So I think this little pop up here may face a little bit of pullback. I mean, again, could we have today gold is up and it looks really encouraging, then tomorrow it's red and it's just neutralizing today's entire move? Like, sure. So this resistance could still hold right here and push price back down. I think a good swing opportunity is, 4,200 and holding for the foreseeable future, start establishing some channel levels. But the nice part is I don't care what equities you look at. When I see gold and it looks like this is a gettable target, that is my destination and beyond.
I feel the same way.
We went from a 4-year run to a 7 to 8 month correction. Dude, another 12-month run on gold, 24-month run on gold could be fantastic. We could be talking gold at 6,000, 6,500, 7,000.
Well, and gold certainly can have 10-year bull markets. We've seen that many times in the past. And then also just to address one person in the chat, they said gold is the easiest one to invest. Edgefinder is very bullish for many days, but I'm not buying. Making a joke out of myself. Well, listen, I do have long exposure to gold. From an active trading perspective, though, I do have my own rules on how I want to enter and exit trades. And unfortunately, we've had pretty much a straight shot with very little pullbacks. And go to your pros and cons cheat sheet, and you'll know that, if you wait for the retest, that typically produces a better risk reward trade, but it also comes at the cost of sometimes missing the trade entirely. And look, you can run circles in your trading approach. You can change your style, your discipline all you want over and over and over. That will leave you chasing your tail. And so for me, trust me, I'm also frustrated. I'd like to have gotten long gold right here. That was my setup. I had it clear as day, but it left me in the dust. So what am I going to change for next time around? Absolutely nothing. And I'm going to accept that nothing works all the time. It's part of the game.
Right. Yeah. Do you think that the lows are in like 39, 39.40 or so? That's about a 30% correction in gold. 29.66. I'm not saying the lows are in, because I'll just trade options. But as far as me wanting to go like leaps and get more aggressive, look, man, I will take a stab at something around this like 43, 4,200 handle, ride this thing out for probably a 2-year option trade. And if it goes quicker to the all-time highs, it's going to pay very well. If it doesn't, there's ways to do, I can turn it into like a diagonal spread. I can sell against a long call option. I can do all sorts of fancy stuff to like just turn it into an income-driven trade versus trying to hold it for the leverage.
Yeah, no, I would say at this time right now, it does look like the low to me is in. Obviously, when it comes to like targets, I love my trailing stops. So I'm not a big person. It's like, I think gold's going to go right here and that's my target. Personally, I don't do a whole lot of that. I'm just like, okay, direction's up, pull back, I'd long it, I'd trail my stop, and let's go to the moon from here. I'm still going to hold it. I'm just going to keep trailing that stop. But generally, I would personally think this is most likely the low of the year, if not the low for quite some time. I think that you have a lot of bullish factors on gold. I wouldn't be surprised if it keeps moving to the high side. And you talked about maybe some like directional bets, more leaps, etc. I would co-sign that personally. I think that looks solid to me. Especially if you were to get that 4,200 at this point, I would even be probably willing to take a stab at like 4,350. Now that we've kind of had this solid move higher, we're now retesting 4,500 as we speak. We're getting very close to that level. It's a huge round number. So I wouldn't be surprised if you did get a little bit of a back off on this, but any retracements, for me, I think the risk reward is good. And I would just stop out if the idea did not work.
Okay. And then thoughts on Bitcoin, since we had a decent pop today. Is this turn the corner? You think that the low is in for Bitcoin, or is there still, it's still not at the 200-day moving average? I'm very skeptical. I think that everyone wants to be excited about it. I don't think it's there yet, but if there's follow through on the dollar and there's follow through on the yields, I think Bitcoin gets a whiff of like, hey, this is what Bitcoin is made for. It's made for the dollar to print. It's made for, weakening the currency and debasing. It's like, so maybe there's enough pain of financial engineering that it's time to turn the corner. And I mean, to me, the technicals, we've got to get above about 80K. We get above 80K or challenge this level, that may be enough to say, well, if we clear this level, then we're turning the corner. But I'm cautious of like this just turning right back down and being a longer range that we're just not going to get out of for a while.
Yeah, I feel like Bitcoin being up so much today is a very promising sign for the crypto crowd, because you're looking at, you're like, okay, one of the longest stories ever for Bitcoin has been, oh, it's, a de-dollarization hedge. It's a get out of the fiat system. That's been the promise for a long time. Unfortunately, I think it got caught up in the risk market. It got classified as a meme stock, essentially. And I think now some time has passed, things are settling, and to get that sort of a pop on effectively we don't trust the Fed, the Treasury, the US, et cetera, trade, it's a good promising sign. I would agree with you with that 200-day moving average being tested here today. Like to see some follow through, but this is from a price action perspective, showing some promising reversals to the upside. Personally, I'm still going to pick gold over Bitcoin right now, because I like the I'm a little bit more on the still thinking that Bitcoin is a risk asset side of the coin as well. So I think like if the stock market rolls over, I personally think Bitcoin's going to probably roll over too. And so in that scenario, though, I don't necessarily think gold has to go down. So I think personally, I still like gold over Bitcoin, but it's promising, I would say, a good start here for the crypto crowd to maybe be basing out and getting a bit of a breakout going.
Yeah, I think it's certainly the best news they've seen in weeks. With how choppy it's been. All right, man. Well, we got, let's see, gold and silver up today. Big flinch in the bond market. Let's see if there's follow through. We have Fed minutes at 1:30. What's your over under on the paragraph or two? I feel like we're going to get just a little brief statement on the FOMC minutes. Do you think it's any type of event, or do you think that the spotlight's been taken because of the Treasury move this morning?
It's hard to say, but part of me wonders if, Scott Bessent may have given a call to Warsh and said, hey, people don't like the no commentary scenario, because it seems like yields are
that no forward guidance you're trying to tell the whole world. It's like, how about you give a little bit more guidance?
Yeah, and or maybe don't give any guidance if you don't think they're going to like it, but give some more guidance if they are going to like it. Because again, bond yields just keep moving higher since his last meeting. I'm curious to see if there's a little bit of an admission there of maybe we'll give a little bit more guidance, because I think not knowing, the market doesn't like not knowing. And by default, I think yields would float higher. That makes sense. People just kind of being cautious about that. But I still find it really interesting, Chris, that does it surprise you that yields moving up as much as they have had, have really not budged the equity market in any meaningful way to the downside? Like that feels like maybe it should have done a little bit more causing damage, but it seems like the stock market just does not care at all.
I think that's the complacency that we've been kind of lulled into. I think when I see that the VIX is still at 15, I'm like, this does not seem like it's priced right at all. Like not only that, but I mean, let's say the VIX is at 15. Okay, the VIX at 15, you're looking at about an average day move of about 0.93%. Dude, we had days that were like not even 0.1%, 0.2%. Like we have had this insane vol suppression for the last, I have an interesting stat here. This is the last almost 4 months of trading. And I'll put this in perspective, talk some nerdy option stuff here a moment. So almost 4 months of trading, we've had 90.5% of trading days in the SPX be within one standard deviation. That in a delta standpoint, that's like every day you trade that everything stayed within about a 20 to 25 delta. So all that means is, so I'll put it in perspective. If you have a trade that the market opens right here, okay, the expected move every single day is basically like a 22 delta. That's how the brokers all price it out. It's the one standard deviation move, which is around 68%. Okay. So what this is telling me is that over 90% of all trades the last 4 months have been 22 delta or beyond. Like that, it makes me sick to think about how much premium you could collect by doing like a 20 delta iron condor, because you're going to get like out of a 10 wide iron condor, you might get $2.50 to $3 credit. Dude, I trade so much more conservatively than that I'm like, give me $1, make me a 10 delta, give me that 9%. The probability of profit is even higher for the stuff that I trade. The problem is the premiums have been absolute crap because the movement has been so tight day to day. So that being said, I am not being lulled into sleep of like, oh, it's just such an easy, tight market to trade. Dude, this makes me more nervous because all it takes is one shakeup and one volatility expansion, and everything changes for weeks at a time. And this is what makes me nervous about the next 30 to 60 days is, do the VIX ripping from like a 15 to 25 or 15 to 30? That could have a tremendous impact on equities and where we're at. You know, the structure of everyone talking about where's the next dip to buy. It's like, dude, we could have a scare. I mean, not to like Tom Lee has been really interesting with how precise he's been trying to call this like bear market correction. I mean, Tom Lee's a perma bull, and he's like, yeah, I could see the S&P having like a bear market scare. And it's like, okay, well, if you're going to scare investors into a bear market, that means you're taking out the 200-day moving average. That means you're moving down here to March lows. Like that's a bear market scare. So if we're going to get something like that, dude, we're talking a ridiculous broadening pattern that might scare the crap out of every investor to see like, yep, there was the bottom. And that to me would scream final innings of like, if we recovered from a V bottom like this, Nick, and we go for another like 12 months bullish, that would be like an incredible, ridiculous like V bottom. That's like, dude, when this thing can't stop going up anymore, like, God, I feel like this is going to go all the way back to freaking COVID. It's going to go all the way back to COVID and wipe away 5 or 6 years of gains. That's not a surprise to me.
Yeah, I mean, it totally could happen. If you had something disastrous in the AI trade, for example, that would be maybe the type of catalyst that would get us there. In the meantime, you know, it's like you said, with the volatility index, just pretty much stuck in a downward trend here for the this is a let's just look at a monthly chart really quick. Like monthly chart, I'm going to do a really simple kind of trend filter here. You can see for this is a monthly time frame, we've really been in kind of this longer term, continuously lower and lower volatility market. And you know, I hate to admit it, I've been watching a lot of Tim Knight here recently. So
oh my God, bro,
I know you love him. You actually
I mean, I like the guy, but it's like I've not seen him put a long trade on anything.
No.
Like,
but I balance him,
money?
Right?
How is he making money?
I don't know. I don't know if he is. I don't know if he isn't. But I like to listen to him in balance with some of the perma bulls that, you know, because you got all these people you can listen to. You got people who are always bullish. You got people who are always bearish. And I kind of like to try and just listen to
you got to balance it out. Yep.
But he was pointing out, you know, I thought it was funny. He was like, it's like nowadays you hope to see a 20 in the VIX. Whereas for so long,
I know
it's like 20 was the norm. And it's like now if you've got a 20 in the VIX, you know, I've seen us both kind of like rubber hands here, like, oh, okay, we got something to do here. And it's like a 20 VIX is still fairly low compared to, you know, 5 years ago where you had volatility abound in both currencies. I was trading currencies a lot during this time. So in the meantime, it's like what you said, you don't want to necessarily get lulled into a quiet market, get used to trading things, because one thing that, my goodness, I have seen so many traders struggle with this. We've had this conversation 1,000 times, you and I, which is people get used to the environment that they're in. And then when it pops and it changes overnight, they have no idea how to trade it, and it completely blindsides people. Made very clear in the options world, because you can get used to a VIX that's in the teens, and then suddenly you're in the 35, and you're like, oh my gosh, this is a different ballpark. It's a different world. Same with equities. You get used to these sort of moves, and these are nothing moves. Like these are really quiet day moves, and suddenly you'll be back in, you know, these environments down and up where you're getting, you know, these are moves of 2.25%, you know, 1.8. Here's a day that was 4%. So, you know, don't get too comfortable in any scenario. It can change very quickly. You know, I don't know when that changes, but right now I think you're going through the summer quiet period. and we'll have to keep an eye on what could be that next catalyst. But the bond market, at least for now, seemed it was like up next as a potential market mover. Maybe it still is, but this, I think, kind of subdued that in the near term, as evident by, again, that VIX moving down once more. You saw the VIX moving up. You saw the MOVE index also moving up here a little bit. Actually, still kind of holding its gains, down a little bit today. But yeah, we'll keep an eye on volatility.
So I just looked at a trade. I think I have to put this on for my own peace of mind. I'm looking at an MNQ, which is a micro Nasdaq futures trade. I'm just looking to buy a put out here. It's going to cost me about $425 max risk. But if we have a VIX event for whatever reason, I'm going to take this trade out to the end of the year. It's a hedge. It could be an insurance play that costs, very little, but it's worthless, right? If the market's up, just go higher, then it's worthless. But if we have a similar to like a 2024 summer event where the VIX spikes up to 30, 40, 50, this trade probably pays 10x or better. If I built this out in my entire portfolio, that's going to hopefully help offset some of the pain the market might feel and experience. The reason I'm going out to December is there's enough time to get through whatever this August, September window looks like, whatever the Fed does in September, whatever midterm election drama looks like, and then takes it in the end of the year. I think all I'm really looking for is if the VIX flares up or the markets have like a 5 or 10% correction, then this pays really well. If it is, I'm already like kind of forecasting this. If whatever happens is a slow paper cut death to the downside, this is going to be a crappy trade. If it's a slow paper cut grind to the upside, this is going to be a worthless trade and the markets are going to be fine. But it's like, are we that good, Nick, at like manipulating the markets now where it's just like, it's never going to move fast ever again? That's kind of what it feels like right now. It's like, we've been like I feel like they've almost perfected volatility suppression. Now, I say that full well knowing that that can very quickly change. And so everyone thinks it's like, oh, it's so easy. It's like, dude, just hold on to your butts when this thing changes to like a volatility expansion and the VIX flares up one ugly time. It's like how quickly things can move with leverage, with deleveraging. Like it gets very painful very quickly if you're not at least prepared for some type of hedge. So the fact that the VIX is still cheap and the implied volatility of the Nasdaq has come down substantially. I'm looking at an MNQ and an MES hedge. It's probably going to cost me like $800 to $1,000. But the peace of mind of that, maybe doing like a 10x return if I'm right on some type of event, some type of decent catalyst and sell off, then at least I won't feel like I'm not protecting the downside better.
Sure. Yeah, no, I mean, I don't hate it. And I think we've talked a lot about possibly looking at some VIX calls as a hedge as well. It's something I'll explore. It is a tough trade. If the VIX just plummets back through those lows, it's probably going to become more enticing in my view to just kind of plug my nose and buy a little VIX calls. But, we'll see. I'm not in any rush to do that because historically it is a tough trade, tough to time. But
and even if it goes up to 40 in your favor, it's hard to time that and close it out.
Yeah, right. Because you're looking at it, you're like, okay, if it shoots up to 30, could this thing go to 50? Could it go to 60? Could this be the one?
And then 30 can also turn back to 20 the next day.
Right. It's
so
a tricky
a tough
trade.
One. Yeah, tough one.
Yeah. So a couple trades, I'll just rapid fire really quick for a second. A couple trades that I'm looking at. So you're punching in that idea. Yep. I'm going to take a look at a couple here. I am looking at obviously the precious metals. I have to say, and I'm going to admit this with some tears rolling down my face. Last night, I almost got into a silver long, and I didn't because it was after hours. The bid ask was wide. I was like, I'm just gonna. I was looking at SLV, and I just chose. I'll look at it in the morning. Shoulda, coulda, woulda bought a little bit of SLV, but I did not. It was like really illiquid hours. So I just, it is what it is, but I'm going to wait to see if we can get some pullbacks. I may take the long trade on silver. If you get it, it could be one day away. These things are very quick moving right now. Metals are showing some volatility. Let's take a look at GVZ really quick. GVZ, a little bit of volatility coming back into gold here. If I'm looking at gold, I'm interested in this 43.50 level. If you were to get a retracement over the coming days, if you don't, then I'll cheer on the bulls. If you guys keep seeing this thing rip higher without me, then I'm just, I'm thrilled for the people who have caught it. If it can pull back, I'll probably look to join that trade. Same with silver. I'm also interested in potentially shorting oil, but I would actually be more interested in this, as counterintuitive as it may sound. I'd be interested in it lower. If it starts to break this 75 level, I'd be looking for break and retests here. In terms of what else do we have here on the watch list? Nothing crypto here on the Ethereum side. Bitcoin, I'm kind of neutral on. Dow Jones, bit neutral. DAX, slightly bearish. The Nikkei actually still slightly bearish as well. We'll see. I mean, the Nikkei here showing a little bit of strength overall. So maybe not my favorite chart, but something to watch. Let's see, what else do we have? Dollar, I remain pretty bearish on this one. So if we do get some pops in the DXY in the next few days, breaking this huge level of support, this kind of 99.4 level or so, now acts as potential resistance. You're sitting at some support here as we speak. So if we were to get a bounce in the coming days, I may look to pick up some euro dollar and maybe pound dollar here to the long side, looking for DXY to continue. I think we could see 98 on the dollar. We'll see, but I would be interested in kind of following the trend on this, which is very much in line with the thesis on gold. It's kind of a very similar trade. So we'll see where that all goes, but leaning dollar bearish, precious metals bullish, oil bearish, equities pretty neutral here, at least at the index level. So that's kind of summary.
I think whipsaws. I think we deal with some whipsaws. I pivoted for some reason. I couldn't get filled on MNQ, so I'm doing MES. It's actually cheaper. But I'll plug it in. I'm doing a MES December 18th expiration, 6,300 put. It's going to cost me $38.50 debit, which is about $192. I'm doing 2 of those contracts. The crazy stuff is for $385 max risk. If we have a ridiculous flare up in volatility, that could easily pay like $6,000 to $10,000. That's a very low risk trade that I'm happy to throw in. And if it's off and it's worthless, it's like, oh, all right, so I lost $385. No big deal.
That's a pretty
very
good,
asymmetric. Yeah,
that's a pretty good hedge distance there. It's a 19+% move here.
Yep. But all I need is like, so I'm thinking, dude, all I'm thinking of is like either the crazy crap that happened in 2020 or 1998, or the crazy crap that happened in 2024. If you are long VIX futures, if you're long VIX, if you're long futures options, that VIX at 30, 40, or 50, those options are like exponentially more profitable because of the way there's I think it's the way that it's like span margin. This is how people blow up their account in summer 2024. I mean, the pullback was like 10% S&P, but the futures market blew up traders across the board. I mean, I saw some very good traders that did a lot with futures, and they were sitting on 6-figure drawdowns in a 1 to 2 day span. And I was like,
wow.
Holy shnikes. So yeah, I mean, it works both ways. Like because of that type of span margin and that span leverage that you get, it could be a very lucrative position. And yeah, I know it's way down there. My intention is not to take that trade's not going to be in the money necessarily.
Sure,
it's more just, do we have a crazy expansion in volatility that gives me a chance to get a good chunk of profit on that.
Right. And you said out to December. Is that what you're doing?
December 18th is the furthest expiration I'd go into for the MES right now.
Okay.
I'll post it right now, so you can all copy it if you want pulver alerts. I'll throw it in right now.
Yeah. Cool.
I'll put this in the futures trade section for my pulver alerts. This is a new trade. This is end of year hedge. And it is MES. So 12/18 expiration. The 6,300 put. It's a 38.50 debit. Filled, and that is a max risk of I think it's like 192 a contract. So if we did one contract, 192.50 a contract. So I'm doing a couple contracts there and looking for a volatility event, a 5 to 10% correction, anything that changes the current low vol environment. Because this stuff today with the bond market, it just doesn't sit well with me thinking like we can just completely manipulate ourselves into all-time highs. It just doesn't feel like the bond market's going to roll over and do that. You know, I don't think it will. So
the question is, the question I have too is the Bank of Japan, if this is an effort that's going on where you have Bank of Japan wanting to hike interest rates, U.S. in support of the yen to try and keep their biggest customer kind of happy, the Japanese being a huge buyer of U.S. treasuries. The one kind of hesitation I have on getting too bullish the Japanese yen is that I think that there's still sort of a conflicting. Their economy is at 0.3% GDP growth versus 0.5% expected. That's a recent report here. We also have manufacturing PMIs. Like, there's some softness in their economy as well. I think that there's a limitation on how much they may want to actually hike interest rates. They've talked about doing it at such a gradual pace because they want to have simultaneously growth as well as strength to the yen. So if that was different, if they had really strong growth right now, I would be much more inclined to think like, oh, the strength is going to continue. But we'll see. I would lean a little bit more until proven otherwise. I think that the yen probably weakens more so than strengthens. But if on the off chance there is sustained support for the Japanese yen, I would throw that idea out the window, because that would be a serious sign of potential volatility expansion to your hedge. There would be, in my opinion, some strengthening of the yen, some follow through to the downside here for dollar yen, Aussie yen, things like that. These things have been in perpetual uptrends for a long period of time. So if that flips directions more decisively, we'll have to watch and see what happens there. I'm just going to take a quick look because we have some time here. Let's just do some sector analysis here in terms of which things are doing well. Energy stocks continue to be pretty dominant this year. XLE flying high here. Meanwhile, this is comm services kind of flat here. Consumer staples holding up their own, but pretty choppy here. If you're looking at financials continue to be strong. And maybe the idea here too is the AI trade is still alive and well. These are, and also software has come back. That's a good story for financials. Also the IPO market and things like that. XLU, this is utilities. Utility stocks, kind of a boring session. XLY also pretty neutral. XLRE, this is going to be real estate. Real estate is an interesting one. If you think yields are going to keep moving lower, which I'm kind of mixed on. XLRE, real estate might be an interesting spot. KRE, this is regional banks. Regional banks down sharply here today. Let me just look at this. Financials and regionals. Regionals down sharply here today. There's probably some logic that I'm not thinking of off the top of my head that has to do with long duration bonds getting bid today and negatively impacting, because you can see right there at that 830 mark, regional banks got sold hard. So maybe something I'm not thinking of, probably something to do with.
I think this is that's the game of hot potato I've been reading about, is that the Fed is essentially trying to off some of the balance sheet exposure and the balance sheet growth on the Fed side. It's trying to off that into like the banking sector. So I don't know KRE necessarily would be like the bank that, the regional banks would feel it the worst, but the banking sector as a whole, they are reducing restrictions and they're allowing banks essentially lever up to like take on some of this added stress. Again, it's not like we're going to break the banking sector, but it is kind of passing over like that debt bubble is like going to be. I think the banking sector is going to bear a little bit more of the burden of that. So that's where I think we're maybe seeing that reaction.
Sure. Biotech, IBB actually flying even more so than XLV today. Probably your
that's Moderna, probably.
Yep, your Moderna situation.
Yeah, I mean, cancer screening is a big deal. I read this last night too, that some of the top like AI people are like, how do we win the crowd over on AI? Cure cancer, like
for sure.
Like be something better than just like data centers and LLMs. It's like, you guys cure cancer. I mean. That is literally one of the biggest things in everyone's life. It's like, get something that's like, this is for good. This is for everybody. It's a huge breakthrough if that happens. But
if you're going to keep the AI trade alive, I think a piece of that puzzle is broadening the story, right? People are getting tired of like data centers and, AI for, replacing jobs and things like that. Like, you need new stories. Right. You need new things that people can kind of sink their teeth in, investors can feel excited about. And people will celebrate AI instead of booing CEOs at college graduations. That's the current trend.
Yeah.
But yeah, technology also kind of softer on the day. XLI a little softer on the day. Not exactly sure as to why tech is down. I would think that the higher or lower yields would be positive, but maybe there's something. Semiconductors are modestly lower here today as well, following through. They were positive on the day. They've lost that ground. I'm just kind of going through everything here, Chris, just to see. GDX also popping. Do you have any GDX stuff going on?
You know it, bro.
Very nice. GDX up 7.7%. Alan in the chat says Abbott Laboratories. What's going on with, look at that, ABT flying high here. Yeah, I mean, gosh, XLV, that's another one that I liked this year. And I've played a couple healthcare stocks, but I wish I had more exposure right now because healthcare looks solid, and it is historically kind of not a low correlation to the market, but a lower correlation than some other sectors. And I personally like the idea of rotating away from too much tech concentration in my portfolio.
For sure. Yeah. And I wonder if, I mean, rotation wise, I still like the boring stuff. I don't know. I feel like this is going to be like one of the most boring years that I've ever made profit. Just because I didn't chase any high flyers. I just sold a lot of premium. My best trade that I forfeited was Intel. I was long at 18. I dumped it at 50, went up to 110. So I'm like, yeah, I let some go. But dude, I didn't chase a single SanDisk, Western Digital, freaking Micron. Like, I didn't chase any of that stuff. I was just like, why is this happening in 30 days? This seems insane to me. And here we are, like, after a pullback, after the Kaspersky, Hynix, Samsung. It's like, funny enough. Here's I think it was this SanDisk. Somebody showed this chart online. Leopold Aschenbrenner from Situational Awareness. When the fund,
I put all my money with him. How are we doing? Just kidding.
Well, it's in the good hands of Ken Griffin now, a Citadel.
Oh, good. So we're doing great.
You're just been cut. You've just been cut by 80%. That's all. No, but this was the day that they liquidated to Citadel. Like, I mean, it was a pain. Now, you and I talked about this. I'm like, I mean, I can see like this trade with this type of pullback being like, oh, that's the bottom of like the deleveraging that was needed in some of the AI space. But to me, guess what the pullback was on the S&P? 3%.
Yeah.
You call that a bottom, dude? You call that a tech bottom? It's like, dude, the Nasdaq was down like 11%. Oh my God, is that a tech bottom? It's like, that's nothing. So it's just amazing how this like record-breaking dispersion has been like front and center, but it's so hard to trade, in my opinion. I think it's nice that the indexes have absorbed a lot of this dispersion without like leaking lower. Also in the middle of a Middle East conflict with a struggle to maintain a petrodollar and trying to keep oil prices down. And yet the index is just like churn, and it's hard to go down. And we're clearly seeing lots of levers, lots of manipulations being put in, and that's fine. But yeah, dude, I just can't look at a stock like this. And here's my big, bold forecast for the rest of the year. These stocks don't do anything. This stock goes up, this stock goes down, this stock goes up, this stock goes down, and we just have this giant indecision. And this is what the rest of the year looks like. And everyone's like chasing direction. But dude, the IV was 99 and now it's down to like 30. That's crazy different as far as like the environment of trading these stocks is so much different than it was. And I feel like now that people see like, oh, this is lower implied volatility, I can get long. I don't think you're going to get any direction now. I think this trade is done and cooked until there's like more of a broader bull market. But I don't think that's the case. I think the rotation is very much a real thing.
Yeah, I think it's interesting too, because you have just a graveyard of stuff that you look a year ago, what was high flying and exciting, and then you look now, it's so often the case that you're like disappointed. And to your point, when you said that about SanDisk, it's like that kind of came to my mind. It's almost like when you see these stories, SNDK, right? When you have a SanDisk, when you have a Micron, when you have something that is like right there in the spotlight, other than maybe Mag 7, which are simply so large that they always stay in the spotlight, anything that's like sub top 50 in global market cap, it so often is the case that it's hot when everyone's looking at it, and then a year later it's like nobody cares. It's happened so often, and it's like, is that by design? Is the market like designed to kind of like get your attention, everyone gets hyped about, or is that just human psychology on display? Like everyone gets excited about a name like SanDisk. And I would not be surprised, like if Chris, would you be surprised if a year from now SanDisk is, here at $900 a share and nobody's talking about it? I would not be surprised at all.
Wouldn't be surprised. I wouldn't be surprised if a lot of those trades just unravel for that exact reason, where it's like,
Yeah.
it was good while it was until it didn't make any sense fundamentally. And then there's earner revisions lower. Nobody cares about it. And it's right back where we started.
Well, and
Which
it
is
could be the
why-
case, maybe even worse is, or not worse, but maybe even more likely would be a year from now, it's like right where it currently sits. Like it just gets so boring and not
Sure.
talked about.
Well, dude, look at Meta. I mean, Meta, you can go back. Let's go monthly chart on Meta. I mean,
Yeah,
how
sure.
many years would you sit into a Meta stock?
Just gone boring.
And it's like so basically we had a big run up through, I guess in 2024 is when Meta got a little bit better. But I mean, if you were in Meta in 2017, 2018, you didn't really get any love in that trade until 6 years later.
Yes.
And that's a Mag 7 stock. That's a money printer,
it's a
right?
big one.
And it
Same
took
with
6
Tesla.
years. And Microsoft was a lost decade after the dot-com burst. It's like Microsoft wasn't good until like 2011 or 2012.
I got one more to one up you on that. That's Tesla. Check this out, Chris.
Yeah, true.
This one, oh my gosh, it was like the story stock, the darling story. For so many years before 2020, it did nothing.
Yep.
Like it chopped and chopped and chopped, and it was like, oh, here we go, and then it was chopped for another 2 years, and then all of a sudden, all the gains paid off in the next year. Boom, where it just went skyrocketing in 2020 and 2021. Yep. So that's the challenge with individual stocks, right? Like if you're trying to play the individual stock, you could pick the right stock, but not be in it during the glory time. Like it's so difficult to, personally, I do trade individual stocks, but I'm not naive enough to like put all my eggs in one basket and trade one stock. I trade like 50. I trade like many different stocks because I want exposure to a lot of different areas, because I know I'm going to be wrong on a bunch of them and I'm going to be right on some of them. And that's just the name of the game. It's kind of like venture capital 101 is like, you're going to take 10 stabs and one of those companies that you're investing in might actually be worth something. Correct. So it's, that's, if you can't handle that loss rate, probably better to stick to, holding ETFs, and nothing wrong with that. Like that's going to be way more consistent of a strategy is to stick to the indices, or even just to ETFs, even more so than getting down to individual stocks. So Chris, we just had meeting minutes drop here.
Yep.
I'm going to just see if I can find anything interesting.
Let's go to your little full page macro where you get all the little 1 minute charts. If you want to pop that guy up. If you got
yeah. I got you.
We're up a little bit. SPX is up a few points, up to 77.20. Let me look at some gamma on the day.
Yep. Here's your all markets.
Yeah, there you go.
So
today, still sticky around like 77.20, 77.25. Those numbers look pretty good. I've got some pins on today, dude. It'll be interesting. 77.20 is a pin price for me. 7,700, 66.9. Like, I'm looking to see. I'll just throw out the primary levels. If we come up to 77.50, big profit. Hang out at 77.20, big profit. Hang out at 76.95, big profit. We'll see if the levels are close in the next couple hours.
This is kind of something interesting here. Just reading a headline.
Okay.
A few participants who favor. Sorry, I'm just reading off this.
Yep.
A few participants who favored raising rates at the meeting judged that doing so would likely help forestall. Never heard that word before in my life. Forestall the need for further hikes. And then here also just breaking recently, the U.S. is set to have tariffs on Canadian steel and aluminum in trade deal. Okay, that's interesting. Fed minutes, no decisions were made of the number of meetings, and Warsh indicated that no change to the 2026 schedule would be taking place. Okay, so seems like pretty much nothing. Although that kind of hint at like, if we did hike, it would be more of an insurance hike, like a one and done type of thing, rather than hike with more hikes behind it. That could be taken as maybe just modestly more dovish than expected, but no big moves here as of yet. You've got stocks here, S&P's up, just very tidbit here. Let me just check yields, see if yields did anything. 30-year yield here on the 15-minute chart, still near lows of the session, and dollar index here also still near lows of the session.
Is it just me, or was I spot on saying this is a paragraph for FOMC minutes?
Let's see what you got on your screen here.
I just clicked on the link in Financial Juice, and this is all I'm seeing. Minutes for each regularly scheduled meeting. It's like there's got to be more to it than this, right? Minutes can be viewed on the board's website. All right, let's see if this will click us there. I'm sure it's at least a page. Where are we? Oh, that's not it. I'm just like, I'm like joking. Like if that's accurate, where this is, here's your press release for today, August 19th. I'm like, that's it? A paragraph?
Yeah.
There's gotta be more to it. There's got to be more to it.
I'm not really seeing any major headlines breaking in response to it. So
weird. All right.
So far, nothing substantial. Yeah. I mean, I think
noisy day.
Yeah, gold, silver
230.
continue to kind of reign supreme here. We have silver up 4.1% today. Gold's up 3.7%. Nothing standing in the way right now, at least, to the gold bulls right now. They are just dominating here, and it's a nice change of pace because we've been in gold bear land for a long time. So it's nice to see that shift.
Yeah, no, I agree. It is honestly like it's nice that I've just been taking little screenshots for myself the last couple of weeks because like once I started poking those like year-to-date highs, the nice thing is we're not at all-time highs in the markets, and I'm at year-to-date highs. I'm still pushing up, and there's still another probably 5 or 6% just left in time decay for me. So I'm like, I might actually have a solid, year without chasing my freaking face off. So
yeah,
we'll see.
Not too bad. Well,
yeah.
The diversified approach has actually been decent this year. I mean, you've got some, you've still got kind of like the outshine due to what some of the memory stuff has done, but like, who cares? At the end of the day, for every one person that catches that trade, most people are not catching that trade. And if they are, they're chasing it towards the tail end. So it's like, you kind of, as a trader, we've talked about this many times, you never really feel comfortable because you can always kind of think about like, oh, well, I wish I had more memory exposure this year, or I wish I had bought gold at the lows, or I wish I had sold gold in January. That was a big one, right? A lot of people chased gold in January. And it's like, you can play those games in your head about what you shoulda, coulda, woulda done. But if you're sitting on gains this year in the chat, like, good for you. Don't let the outside influencers and people you're going to see on social media and people, bragging about their micron victories this year, like, take it with a grain of salt and be proud of yourself if you have positive gains.
Yeah, when you've got the president revealing 20,000 trade positions the first half of the year, it's like, look, everyone's going to feel FOMO this year. when you're being told by the government what to buy and you're not in it, you feel FOMO this year. Like, look, as somebody that's been doing this for a long time, I can promise you I feel FOMO this year.
Sure.
But it doesn't make me a better trader by chasing that stuff and thinking like, this seems like a logical trade. This seems like this. It was not part of my trading plan. SanDisk was not on my freaking radar at all this year until it's being blasted out of like, it's up 500% this year. It's like, so what do I do with that? Do I chase it? No, it's just, look, stuff like that happens. I mean, Moderna today's up 140%. Not on my radar. The company has, like, fundamentally, it looks like crap. Here's Moderna.
Sure.
Right? Revenue forecast to grow, it's 11 times sales. You know that fundamentally, that's almost impossible. Anything that's like 10 times sales is like, that number's, it's la money. There's no such thing as 10 times sales that's going to be something you can grow into. Yeah. Like I said, it was a COVID vaccine 5 years ago when it mattered. And it's like, who still gets a COVID vaccine in 2026?
Right. Nobody. I get like 6 per week. So it's, just to stay up. I got the boosters for the boosters. But Chris, check this out. So I want to show you 2 more charts in terms of like living with FOMO, the realities of market stuff. So a couple of years back, I think my brother-in-law got into like doing some option selling. Like he's like a super, we love talking about it, super like low risk approach. Well, anyways, for a long time, he had been selling cash secured puts on Intel. Did phenomenal. Like, I think he told me that for a year he was selling monthlies and did not get assigned once. And he's doing great on it. And then now, obviously, he's like, I can't really do it anymore because the share price has exploded.
It's 10x, man.
Yeah. He's like, he's playing with like a small account just for fun. It's not like he's not a trader. He's a normal person, not a junkie like us. And, he's selling cash secured puts, doing really well. But anyways, if I'm that person, I'm thinking all that where I should have just bought the stock. If I had just bought the stock, I would have what, 3x my money, 4x my money. And then
Yeah.
here's another one, right? And that's, again, an example of, you can always kind of in your head, you can play hindsight and what you shoulda, coulda, woulda done.
Mhm.
Well, this year, as we speak, I'm thinking, man, I've been really bullish on gold and I've missed this leg higher. But I also know that, you and I, Chris, we watched this run up in gold. It was one of the cooler experiences I think we've had on this show, where we were both long precious metals, did really well. I literally bought this right there with a stop below, and I sold it right there. That was like the best trade of my career, hands down, by far. But I remember in that moment, I thought to myself, because it started going back up again, I was like, you dummy. Like, you let go
It's
of
going
the
to
record
10,000.
breaker.
Yeah.
Yeah. And then sure enough, it crashes lower. And then I felt not so bad about doing that. And then now I'm sitting here and I'm like, oh man, I missed this latest gold trade. It's like, yeah, but I caught the best piece of it. And
For sure.
that's the point. The point is, you can kind of always pick yourself apart for traders in the audience. Like,
Yeah, you will.
You're
should.
gonna not be perfect.
Yeah. And you should, because it'll make you a better trader by picking away your winners
Yeah.
and losers. Like, not just your losers, but your winners too. You always leave money in the table. It's like, dude, I'm never satisfied as a trader.
Never.
It's fine. It comes with the territory, but what it does, it keeps you sharp, keeps you open-minded. You're willing to trade other strategies. You're willing to diversify. You're willing to try new things. And I just think that, look, I'm not the Stanley Druckermill that puts all your eggs in one basket. Watch that basket very closely. That's his saying. It's like, that's great, but dude, if that basket sucks, I don't want to be a part of that. Like, I want to have plan B, plan C to help me get out of that. I want to have other ways to still like carve out and grind out profits if I can. And it's like, I don't know. I don't want to make trading sound like it's impossible, because I do it every day with, we do it every day with thousands of people watching. So it's not impossible, but
Yeah.
it does test you every corner of your personality and your emotions of like, it's real
Yes.
money, it's real emotions. You think you know yourself as a person, try to get to know yourself as a trader. Very different.
Yeah.
Right.
No, and it's okay. That's the point. Is for listeners, yes, Chris and I are kind of rambling. But the point is, you're not going to be perfect in markets, and that's okay. Like, there's room for error, which you don't want to make the mistake of. There's some no-nos in trading, which is too
Right.
big of a trading size. All your eggs in one basket without knowing what you're doing. That's a real easy way to mess things up. But it's just, there's no way to be perfect in it. I remain, just to kind of summarize where we're at here before we call it quits on the show for the day. Final thoughts for me is, I'm staying gold bullish, but waiting for pullbacks. I do have long-term longs on in gold. I know, Chris, you do as well. But short-term, I would like to add to the trade idea and be long gold with a short-term trade as well. I'd be interested in gold or oil shorts if we crash lower. Dollar index, I am still bearish on this one. I think that has more room to the downside. Stocks, I'm neutral. If anything, maybe just a little bit thinking we have some room to the downside. I don't know about you, Chris, but the bond stuff just rubs me the wrong way a little bit. It makes me a little bit more nervous than it does optimistic. I know, and I think the market's reflecting that, right? It's like bond market's kind of freaking out, and you would think, hey, lower yields, stock should go up. But the stock market seems to kind of be reacting the same way we are, which it's like, okay, well, you're kicking the can down the road, but that's not necessarily a fix. That's a Band-Aid.
Correct. Yep. And that's yeah, it feels a lot like manipulation to me. And I just think the bond market's like, yeah, we'll give you a little satisfaction on the day. But
Yeah.
I mean, because the Fed is coming out with an actual meeting and press conference and supposedly an action in September, which I think that all changed, by the way. I think the rate hike scenario probability got kicked down to like December now.
Yeah.
I can be wrong, but I
I
think
think
that
it
all
might have been
changed.
taken off the table, but I could be wrong. Like, it might be pushed back into 2027.
There
I
we
haven't
go.
looked at it.
Yeah, let me take a quick look here. So probabilities, right now we've got pause through September, October.
Okay.
There's still about a 45% chance that there's a hike, so it's less than 50%. But yeah, it would be like a December. It'd be a December hike.
What do you think, Chris? Call the shot on this one. We hiking in December or no hike?
No, dude. Why would we hike?
The same page.
They don't want to hike. They don't want to hike. If they do hike, it's like that's the liquidity
They
crunch
do
that
not
the
wanna
market
hike.
realizes it's going to
Yeah.
be bad. They don't want to hike.
They do not
So,
want to hike.
I
They're
think they're just
happy
trying
to
to
cut when they
borrow.
can cut.
Yep.
They are not happy to hike when they will be forced to hike when they want to hike. And
Correct. And that forced hike is not going to be a good, like, that's not a good sign for equities. A forced hike is not a good sign because that just automatically tightens liquidity. It's going to spread out the credit spreads, you know, from AAAs and triple Bs and whatnot.
Yeah.
So look, today the Treasury came to the rescue a little bit, and we'll see if there's any follow through with that. I still have my doubts, but hey, man, if you've got Bessent and Warsh and a crazy president with a scorecard that matters to go to all-time highs to give him a midterm chance, I wouldn't bet against the levers that we have since 2008, 2009 to keep this freaking thing kicked down the road longer.
So, and here's the thing. So audience members, help us out with this really quick. Give me in the chat, if you think we are going to hike interest rates, put a 1 in the chat. Yes, we're going to hike rates by end of year. Put a 2 in the chat if you think no rate hikes by end of year. If you agree with Chris and I, we both on the same page. Let's just take for a second. If we have no hikes coming, that is just straight up saying you think like, okay, if there's no hikes coming, there's room for the dollar to come down, room for gold to go higher. Now that's an assumption. We're assuming that it's not certain that we're not going to get hikes. Chris and I are making that speculative guess. We could be wrong. But I personally don't think we are. So like, we'll see. But if that is the case, that leaves us room for gold to continue to climb by end of year. And it leaves us room for dollar to continue to fall. Now, the distinction here, newer traders are going to hear that. They're going to hear 2 guys on YouTube talking about markets, and they're like, they think there's going to be no hikes. And clearly they've got this whole YouTube channel. We don't know that. We're making the educated guess. We're saying I'd give it the market says it's 50-50. I'd say it's more like 70% chance that they don't hike by end of year. But there's that 30% that I could be wrong.
Yeah. And if they do hike, I think it's also it's going to be a really interesting playbook. If they do hike, I think they're looking to hike and then pivot, which is also it does give like an odd credibility for the Fed, where it's like, wait, you guys just hike rates, scared the market only to go back and pivot. Like I could see that happening, but it's like, I'm seeing people talk about that right now. It's like, that's a big, bold decision to make the Fed think like, this is how we fix it, guys. We got to raise rates and have the whole market think we're going to do this. It's like, the markets aren't stupid, man. Right. If you raise rates to think the market, it's like, maybe nothing happens. Like they raise rates and it's like, yeah, we freaking had it priced in anyway. Nothing happens. Like maybe it's a 3% correction that happens in the next 30 days. Like there's your rate hike. I mean, and I don't think the market's dumb thinking like the Fed's like, oh my gosh, we're totally thrown off guard by what the Fed just did.
Right. Exactly. I think we're on the same page with that. And just to give kind of another summary here, guys in the chat, you may have missed this we've had a bunch of people join here recently. So I just want to go through this really quick once more. The first reason we think probably no hikes is because they don't want to hike, right? That's maybe the first reason is Bessent, Warsh, Trump, they do not want to hike rates unless they absolutely have to. Number 2 is the same reason why I think the dollar can continue to move lower. It is heavily, heavily impacted by some of the macroeconomic data that sort of suggests that a rate hike is not necessarily appropriate right now. Let me just run through this on rapid fire mode. What we have here on the left-hand side is a bunch of macroeconomic statistics that the Federal Reserve themselves cite as things that they talk about all the time. Okay, so GDP growth. Overall, on the economic growth side of things, we're getting a very bearish signal for the dollar because GDP growth lower than expected. Manufacturing PMIs was upbeat. Services PMIs downbeat, worse than expected. Retail sales downbeat, worse than expected. Consumer confidence, multi-year lows, downbeat, worse than expected. Inflation, cooler than expected overall, noted mostly by the producer price index, which is wholesale prices, the supply chain showing less inflation than what they had feared. The 2-year yield is also trending lower here recently. That is a dovish signal for rates. And so probably that is more of a bearish thing for the dollar. On the jobs market side of things, we're getting a very bearish overall signal here. Non-farm missed by 108,000 jobs. Weekly jobless claims higher than expected. Softer for the labor market, bearish for the dollar. ADP weaker than expected, bearish for the dollar. JOLTS job openings, bearish for the dollar. Unemployment rate, modestly lower than expected, bullish for the dollar. Although if you wanted to put a little asterisk by that, you could say participation rate also dropped to the lowest point. So summarizing our macro here is a story that I find it really hard to make a convincing, compelling reason for why the Fed group is going to say, oh, let's hike the rates anyways. That's my personal opinion. So I would be more on the side of betting bearish on the dollar. By the way, if you are newer to the streams and you don't know the product that I'm showing here, this is called Edge Finder. It is a macroeconomics heat map. It helps automate a ton of macro fundamentals, technical analysis, institutional activity scanning through the commitment of traders data, crowd sentiment signals, etc. If you want to try it, we'll drop a link here in the live stream chat as we speak to where you can sign up for a free trial. It also comes with a macro fundamentals course. So if you want to learn more about the stuff that I just rambled about and how it impacts markets and trends, again, we'll drop the link here in the live stream chat to where you can sign up for that, or head over to a1trading.com for that access. Let me just get that link here just so I can have it. Live stream links, Edge Finder trial. Boom, there it is. Try it here. Click that link. You can sign up for trial to the tool and check it out for yourself. Chris, that is any last words here on what happened today?
No, I'm curious where we end up working into the close. We're still trading live 77.12. I'm looking at those key levels 20, 50, or the zeros. We'll see. I've got I've got it surrounded. I'll see if I can land a little butterfly spread later into the close. But I mean, Trump is due in 10 minutes. I don't know if he's going to say anything at some White House conference. I also think that tomorrow, like read the tape tomorrow, if today's move just kind of gets backpedaled, noisy whipsaw indecision, doesn't really mean anything. Look, eyes wide open for the next 30 to 45 days. We have to get through, September is usually a pretty bearish month. I just think there's, the stuff that just happened today, Japanese yen's always kind of slippery in this window. There's low volume through the rest of the month. There's a little bit less liquidity. Things can get stupid. There can be some whipsaws. So just be patient. I'd like to see a couple of hedges play out in my favor, but I also don't know if one good hedge for me that turns into that just went there goes the top, Nick, and the whole market's like, we're not coming back to 7,100.
Sure.
So anyway, we'll see. I just want to see if tomorrow kind of eradicates the entire move today.
Yeah, we'll certainly we'll keep an eye on it, see how it goes. Chris, that is probably all the time we've got here today. Thanks for coming on, as always. Extra long session here. We went 3 hours, 20 minutes between everybody who was on the show today. So shout out to all the other creators who came on, traders sharing their thoughts. And Chris, with that said, we'll see you on the next one, man. Thanks for coming on.
All right, thanks.
See ya. Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.